We're going to be streaming today stocks, futures, options, crazy AI squeezies right now. Got a little Yaz going for you. I'm going to get set up here. Make sure to subscribe, like, hit the notification bell, get on our Discord, share the stream on Twitter. Good job. Okay, just tweet out the stream. Yeah, crazy pre-market indeed. Like an 800% gainer on that CXAI. I think you guys on Discord now. Morning Rally, morning Big Hugs, morning Isaac. It's not HKD. The ticker with the letters AI in it. Okay. That needs like 20% gains. Good morning, Green Alec. Morning, Rally. Morning, SHF. Most epic dip of our lifetime. Okay, let's see. It's all shared up. That's good. I'm gonna raise these levels. So I guess some banks had earnings. Not much reaction from the market, it appears. Yeah, I think all the pre-market earnings have already come out. I think Wells Fargo was up a little bit. Tight little range and extended hours there. Yeah, we're at the highs here, so we'll see. SPY might be double topping here. levels down here. Yesterday's totally rational rip on SPY. About as rational as the CXAI rally. Nat gas made new lows, so I don't know if I should cut losses on that. But it broke down below the $2 on the futures. I don't know how I traded this one so poorly this time. Just wasn't patient, that's how. Wasn't patient. See what happens at open, but I might cut loss on this thing. It could hang out below $2 for a year or more. Morning, Hayes. Morning, Dennis. Given that it's a Friday, I feel like there'll probably be some profit taken on CXAI. However, might have a big gap up on Monday as more people hear about it over the weekend. SMX had a little move up too. It kind of sold off, but this thing was up like 25% or something this morning. What? 60%? Jeez. Yeah, when I found it, it was up like 30%, I guess. Had a 60% move up though. That's not bad. Yeah, I should have woken up at 4, I guess. Sometimes it pays to wake up at 4 and trade that pre-market. Literally CXAI, like this was 4 a.m. Started going and did an 800% move before 5:30. So you woke up and bought it at 4. Didn't even go that high. Yeah, 732%. Bottom to top from 4 to 5:30. No halts in after hours, just straight rippage. Second download on CXAI. Yeah, I'm interested in Tupperware actually. Not only the chart, but kind of what's going on behind the scenes here seems kind of interesting. They added advisors for a turnaround, which is good. It's at a historic level. That 1150 was the low back here at COVID. Back at it. It's got a little bit of retail sentiment because of, I think, that tweet. Kind of interesting. Don't know what their debt is, but I think they're actually making money here. Operating income is positive. 300 million revenue a quarter. Forecast only 70 million. So yeah, this one might be a good to buy and hold. Keep an eye on it. Make that make sense. Better than being negative, yeah, for sure. Yeah, I was just impatient on my entry on that gas. If I was patient, I probably never would have even entered. Given that it broke all those lows. Oh, damn, you're spec on Discord, so you just joined on there. Nice. UI action? I don't know. I must have biked up. Yeah. Maybe. Keep an eye on it, look into it, it's kind of interesting. Not because of the RC tweet. I've never looked at Tupperware. Other than the other day when you told me about it. That was it. Never even considered it. SMX gave back all those gains. BBBY down 1.8. Wow, big flush pre-market there. That's strange. I like SI. 20 down the road. Yeah, I mean, that 150 is a nice level on SI to buy on the dips. Got this inverted head and shoulders going on. I mean, the chart looks pretty nice. Got a bull flag, another little bull flag here. That is a bit of an RSI divergence there, though, isn't it? If that shows up. She doesn't show up on the 4-hour. That's the thing with the shorter time frames with that thing. It's like, yeah, it's way up. Oh, it's there on the 4-hour too. Not a great sign, but price action would lead you to believe that it's solid. So maybe weighing that heavier is a good idea. Not a divergence on the daily. 56 cents, I don't think it's going to hit that. $4.16, a little more rip. Yeah, retesting that high. Yeah, I mean, the momentum's still there. With the VIX levels, it doesn't seem like this rally is going to break out. So, a little more ups, which would put us into that 416 range. And probably rejection. Turca, SMX. I think I might close out of Turca. Oh, geez, 3.5%. I didn't like this chart a whole lot. OEV looks like it's kind of double topping there. See if that moves up. We'll go down 2.5. The same little double top on the hourly. Open GTI continues this trend. TIM. Channel trend. Dude, this thing hits $60. Oh, I sold it off. Ding, ding, ding. That's the opening bell. Got here. Yeah, CXAI. Yep, starting to go up. Now it can get halted, which it maybe just did. Yep, it's halted. That's crazy. 2000 traded right till December. That ain't bad. Five's moved up here. CXAI was halted immediately. Morning, Tasty. Express. BBY's coming down. Look for 20 cents today. There's 25 cents. Express had a pretty big gap up. Interesting. So with CXAI halted, I wonder if GFAI is going to take off now. Possibly. The other AI tickers. They forgot they weren't in pre-market. We're coming down here. Goes down 4.5. SMX is down 3.5 now. What the heck? You're going the wrong way. Two M's down 2. GFAI hasn't started trading yet. GME, a little pop up here, 1.1%. Birds, it's up 4%. That's interesting. Now, the SI's up 1.5. Upwards up 8, 9%. SPY's moving up. Some Russian roulette. Yeah, that's crazy. We'll keep an eye on CXAI. Birds, 10% here. I mean, this is the GFAI did almost 1,000%. So it's actually CXAI is more, but it's not a whole lot more, I don't think. 2,000%, I think. So it's 1,800%. I guess that's today. But then if you count pre-market, it was a couple thousand%. Look at that gap it's got. Oh boy. Express up 18. Kinda makes me want to keep my GME calls. Yeah, be careful CXAI for sure. It's gonna be volatile, especially in the first hour or two. Be massive profit taking. Could rip first. Could be lots of halting both ways. Don't market order the halts. SMX now up to. Oh, it's down 4. Oh, I was looking at SI. I like this thing to hold. Hold some levels. If you don't look at extended hours, this looks like a nice trading. Nice grind up, holding a high level. Extended hours, like what the heck? SPY's ripping here. CXAI is resumed, and now it's halted down. Yep. Halted down now. So they went down $3 and halted. Okay. BBBY kind of double bottoming there on 24 cents. See what happens with that. SPY's ripping. Tesla shorts green. SPY moving up to the high. 414 was a pre-market high. Give me up 120. GFAI might just be moving in sympathy with CXAI now. Know what it looks like. Dang it, Turka. Cut on this one. Yeah, I'm cutting it. I don't know. Like I didn't. Yeah, that was me. I got it, Turka. Such a stinker. Why she treat me so bad when I love her so much? Don't do me like this, baby girl. I just straight green candling out of here. Bet bat down 4. There you go, GTII. Did you wake up yet? Nope. Nope, still asleep. MCOM, another 4% down. By rallying. Jimmy calls green. Look at that. SPY, new high there. Guess they like the bank earnings. GM is up 2%. Next level above here. Guess just 415-ish. Yeah. Great. Even Steven there. Respects any of those resistances. Big green candle on the open. Express 17% on this thing. Impressive. SI up 2.5. Yeah, I would imagine good bank earnings would help SI a bit. So Wells Fargo ripped up and then sold it off into open. So not too much conviction there. Oh, this went back. This went up through that 2.7 level. That's crazy. Did that pre-market? Even think about that. Went all the way up here. Yeah, that had a big move. Went up to 3.7 pre-market. wow. I should have. Could have had like a limit sell. SPY rejecting that right at that line there, 414. By short squeezing. Thanks for the likes, guys. We've got 9 thumbs up. About 10 minutes in. Pretty exciting pre-market there. Oh, 8. One of you guys took it away. How rude. How rude. Thanks for your thumbs up, guys. Really appreciate it. SPY, yeah, rejecting that level for now. CXAI is resumed. Coming down. Halted. It's not even moving on here. Gonna halt again. This thing's moving way too fast. It's kind of finding some support there. Not all profit takers. whatever reason, it just doesn't look like big moves on this chart. But this was huge. This was 65% after hours. Wow. Similar to GTAI, it just doesn't look like it makes big moves, but just because they're illiquid and the chart always has big ranges on it, so you don't, it's just all relative, and yeah. Kind of interesting. Tupperware is up 7. Pulled off a little bit from pre-market. BBIG up 5. I looked at this one yesterday. Tried to get some calls on it actually. You guys still holding this one? SI up 1 1/4. Consolidating here on CXAI. Looks like the 10th. Upward candle, 50 cents to 1 cent. Oh, this day? Maybe. I didn't pre-market. I broke that level, still going up. CXAI has some buying pressure for sure. Got a new high there on SPY, 414.30, 415, kind of a next level up there. Express kind of moving up almost 20%. Is there news on this? Deal to buy bonobos from Walmart at a big discount. Walmart selling bonobos for $75 million to Express. Menswear brand bonobos. Express is buying brands from Walmart? Can they afford to be doing that? Just the next article down here is Express receives non-compliance notice from New York Stock Exchange. And now they're buying bonobos. I'm surprised that would even be bullish. Huh. Well, they're almost in compliance. Getting close to $1. SMX just jumped up 5%. This thing's crazy. It's crazy that's 5% too. SPY really just squeezing out of open. Straight up. Somehow my Tesla short's still green. Not for long. That gas got a little bounce. Hope it doesn't find that $2 resistance now. Ah, GTAI? You awake? Oh. Not awake. Oh, maybe it is. Possible GTAI is traded today. It is trading. Here we go. It's up 5%, I think. SMX up almost 10. CXAI back up. You halted again? Oh, still trading. One's definitely gonna be looked at today. SMX making a move back up. Bed Bath with a bounce. Interesting. Up above VWAP. It's only down 2%. Some flattening out on BBY would be much needed. You guys watch that interview with Sue Gove? I guess it's Gove, not Gov. Gove, I guess, would be Gove. Dude, SPY, what the heck? It's like, why didn't it do a pre-market? JP Morgan, holy smokes. Okay, this is the one. Wells Fargo, not great. JP Morgan, though. Big rip. Big earnings rally. Surprised SI's not feeling more of it. Some of these smaller banks. It's got to be the banks just pulling the SPY up, right? CXAI looks like it's flat, but it's traded like 30% range this morning. Looks like just flat consolidation. Top to bottom, you've got 27%. Express, 24% up. Jimmy strong like bull. So is BY, look at that thing. Down only 1.5% now. Holy smokes, Jimmy strong like bull. Yeah, 2.6% up on GME. That ain't bad. To me, it's not about price at BBY, it's about momentum. So, it couldn't say. It might not be till $1. I'm hoping it's before $1 that I see the turnaround. But if it has a huge gap up, or it starts going and I don't want to chase, and you know, big volume, big price action, I'd probably just end up chasing, jump in, and hold it. But if I'm looking for technicals, I'm looking for what the last 3 false signals have given us, which has been engulfing candles and volume. This one was the most sure one I've seen that got failed the next day. But this could still be a false breakout to the downside. So yeah. 7 theories busted. Not yet. I mean, it's only been to 20 minutes, 30 minutes. SMX up 11. Go, baby. Almost 12. Yeah, GME, holy smokes, 2.7. Really getting the SPY feels today. Time to probably close these calls. Thanks, GME, it's been fun. We haven't even, when we gapped up here, it still wasn't crazy. So it probably is still above 30 bucks. And it might not even be up there anymore. You mean being fixed. SPY just literally straight to the moon. 415. No pullbacks. No surrender. SMX 17%. 18%. I like it. See what happens at this 2774. Didn't care about it pre-market, but that's doesn't mean much. SPY starting to pull back a little bit. Probably cut some GME calls once SPY starts weakening. Okay, sold one of two calls. GFAI just consolidating in a 30% range. Rest still up 20%. GTII ripping 7.8%. That is neat. Ripping in the most illiquid, glitchy of ways. Light volume on GME. Not thinking this is gonna last. What a greedy order to sell the second one. And this is all just from the SPY. Press holding up a nice level. CXAI just flat actually out of open. This is crazy. Let's see, BBBY. Oh, broke yesterday's high. Tupperware 7%. Birds came down a little bit. Thanks guys for your likes. 14 of them, appreciate it. Not sure where everyone is this morning. MPX. Is that somehow an AI hype runner? I don't even have that on Webull. Morgan Stanley? I don't even have that on Webull. Wonder how hard it's going to be to get out of GTII. It's retesting these highs from 2 days ago. But I'm liking it for hopefully a rally back up to either 230 or even higher, maybe 250. SPY showing signs of a top. Big wake up there. Lower my price on my call for GME. Is it now red? No. Alright, closed out of both my GME calls. Been fun. I got lucky. I made money on long calls on GME. $45 made me slightly holla. Is he over 35? Oh, you're talking GME? Dog. If you get to 30, I mean, you're gonna know when to sell after that, because it'll probably get halted somewhere. It's gonna be going nuts. Hits 35 is gonna halt. Then you know. Or hits 40 in a halt, then you'll know. Hold on till it gets shut down. Maybe not with a halt, but obvious manipulation. Shut down. Rest holding up nice, 21%. I guess SMX did get close to that level. I'll just keep holding as it just continues to make higher highs, higher lows. Could take some off the table here, but I don't know. SPY moving up again, not a reversal. I don't have SKR either. I'm not sure what you're trading on over there. Got all these crazy tickers. Trading on like an Etch-a-Sketch or something. kidding. This is Webull. Doesn't have access to everything potentially. However, Chinese stuff, Chinese IPOs, pre-market, it does have access to more than other ones. GTII 7.8. Breaking out of that high there. That is neat. What the heck? 7.8. 1.7. Skrr. Is that what you're trying to say? Dude, SMX 35 right now? What am I saying? I'm not used to looking at this brokerage. So confusing. This Thinkorswim. It's supposed to be my Theta account. It kind of is, but I'm just kind of swinging shares in there too, so. Size 0.53. That gas little bounce, thankfully. Is MU up 1.6? I averaged down on this. I averaged down on it, or yeah. And then I went green, but no, back red. Oh wait, I still have 35 days in these puts. This was a silly exit I should have taken. New high there on SPY. CXAI is coming down a little bit. GFAI is consolidating. Yeah, CXAI is coming down a bit. SMX holding that 13%. I don't know why this just seems loud to me today. GFAI 8.5. BBBY sold it back off on 3.7. Oh, GME. Big rejection. SPY, big rejection there too. 415. I saw our rivals talking about reverse splitting. Down 8% on that. Yeah, maybe this move was from the reverse split coming up. What was the... Oh, that was a merger announcement. Oh no, that was the... This one was very confusing. You're going back into a SPAC or something? I don't know. Seems pretty consistent that the day of the split it dumps, so keep that in mind for BBY. Sometimes they rally on that day, but it seems more likely that it rallies before then or after then. Guy up a bit. SMX came down some. Still like it though. That gas is rallying. Would be very good. Just a little false breakout to the downside. Tons of buying pressure. Spring test. Boom! Back to $5. You haven't noticed GME halts is a good bit? In a good bit? Yeah, it's because it hasn't been out of control. CXAI halted. The downside. Ooh. With extended hours, it looks like nothing, but turn off extended hours, you can see the range it's in. Can you short this thing? That'd be stupid. Totally can short it. Let's see when it resumes. I would definitely be using a day trade. I have one left. I guess it's Friday. Yeah, I might grab a short on here. Breaking through that low. Of course, you've got a gap fill. My size is up 22%. eBet's up 11. GME coming down. Man, I barely got an exit on those calls. SMX holding above VWAP. Pressing out at the highs. Same with the SPY. GFAI coming down a little bit. It's up 6%. SPY. Whoa, dude, that was a crazy wick on SPY there down to VWAP. Thing's jumpy. And down now. See up an engulfing candle on the 5-minute. BBBY's not curling up. Thanks for your guys' likes. All 15 of ya. Appreciate it. SPY's coming down. GME's going up. Interesting. BBBY is right around VWAP, down 3.2. Kind of holding the lows from pre-market. That's a big move for JP Morgan. Yeah, basically erased losses from over a month ago, one day. SI down 1.26. Might look to sell some more cash secured puts if it gets down to 150 and probably pick up some shares. Especially with JP Morgan's earnings being good. Not that it matters too much, but maybe it's a little sign. SPY below VWAP. I don't want to be stuck in a short though if this thing rips and halts up. Press 23%. Holy SPY flush. What the heck? What's going on here? That's a big move on SPY. Michigan 1-year inflation expectations rose to 4.6% from 3.6. Could have been on that. Yeah, that came out. I don't know. That came out at 10. That's a big move down. You can't buy GFAI because it's halted. SMX 12% up, GTI 7.25. That's a huge flush on SPY. And it's still going. If that was our blow off the top right there, that 419. That hourly candle, that's so ugly. 415. Long haul. Me up 1.5. The path down 3.8. Sustaining that 24-cent level. People just froze. Market's getting a little too volatile for the old Weeble. Oh, there it is. Looks like we've got a order at $10 and order at $16.39. On GFAI. GFAI is back. A little bounce here. Gap filled from the haul. So you do kind of have a level here at $12 or so from pre-market where it built support. I'm gonna leave it alone. I'm gonna mess with it. SI is down 3.2 now. 158. So far it's been a great data farming trade, the SI. 150 for cash secured puts and $2 for covered calls. A nice big range in there too. GFAI. SMX holding up nice above VWAP. VTII, same deal. The XAI coming down more now. It's such a tempting short. See what happens at that 12. 12 area. Or bounce or some support at least. Little channel down. BlackRock CEO Larry Fink says inflation unlikely to fall below 4%. I don't know what was the news that caused this. Oh yeah, you've got a little 12 price target too, Rally. Yep. What was that? Was that Storage Wars? Okay. Yep. Always saying that. Yep. Did you guys ever watch that show? Pretty funny. Well, SMX and GTII so far have been nice picks. Still like Silvergate, more for the premium sell, but I think it has big potential for upside as well. I mean, just a gap fill here is 13x where we are. Crazy. Fink also says he's not expecting a big recession in the US. So inflation won't come below 4%. Yeah, I mean, we don't have to have a recession just because inflation's at 4%. That's true. But you have to start by saying we're already not in a recession somehow. SMX, little drop below VWAP there. Zim is up 6.5. This thing's had a nice rally out of the bottom. All breakout there today. Yielding this RSI divergence as worthless. Yep. Top did give back a lot of gains. Only up 2% now, huh? That 150 level. Find support around there. I set up a bear flag on the 5-minute. Oh, looky, looky, looky. HKD up 5%. It wants to play. AI stocks can't get it all. HKD is going to announce AI something Chart actually looks very bullish on the daily still. See that? And bull flagging. Now today's getting a little engulfing. Eyes moving down. So strange this price action on HKD the last 5 days. High coming down a little bit. Looky, looky, looky. Wow, big flush on GME. Yeah, it's kind of interesting. Buy another 500 shares. I bought it on this account. This account doesn't really have any money. Buy it on another account, but I don't know. I don't know if I like that it's doing something new. Because what it's done in the past when it's ripped has been crazy. So, lower, more sustained rally. I don't know if I want to invest in that side of HKD. Oh, SMX gave back some gains. Dude, this thing's crazy. Just that little bit is so much. Up to 2.8. Even hold some of these resistances from yesterday. The only concern is that it got close to that resistance there. Fully get there, but maybe that was close enough. All on top. Data-driven flush. I'm not sure. BlackRock, I think, was saying something about inflation. The Michigan one-year inflation expectations rose to 4.6% from 3.6%. So that's probably a pretty big surprise. Which might have caused it. We had China Ministry of Defense conducted a land-based mid-range anti-missile interception technology test within Chinese territory. We haven't seen the market reacting to anything really over in China and Taiwan yet. That was at 9:59, the tweet, but you figure the tweets, by the time we get them, probably at least a couple minutes, 2-3 minutes after the market's going to react. Right at 10:10. So it might have been from Michigan. Inflation came out at 10. Sure. Just a delayed reaction to that. 500 shares on top. The XAI back to 90%. Yeah, I might pick some up. I'd actually probably do cash secured puts. I like that IV. But it's not very... There's no premium. Maybe next month. Yeah, I might do some of those. Buy moving down. Breaking through the low here. GFAI with a bounce. MX with a bounce. Yeah, holding up a bit. It's made it Texas. Just did it. Like this. Had some Terra action today, up 8%. Chart doesn't look bad either. Do another share play. Buyout speculation? That's why they're saying it jumped? Oh, that was the... Dude, a lot of people picked up that tweet from Ryan Cohen. There's another article. It's the third one I've seen. Speculating on his tweet. What a mess, dude. As it jumps 18% on buyout speculation, and it's citing Ryan Cohen and GME in the article. GFAI. Climbing back to VWAP. Spies just sold off. Crazy volatile morning. Nothing makes sense to me this week. Thanks guys for likes. We're at 16. Well done. GFAI back up. Triple digit percentage. My size 33%. So this one, look, it ripped the day before the reverse split. There's so many examples of volatility around reverse splits, and not just to the downside. 135% the day before. Gap down and then sold off the day of, and it's sold off since. Wanted this to fail. Is Mark running? What would this one run with again? Was it with fun? Funware? Funware actually looks pretty good, that chart. Yeah, that looks bullish. Mark up 13. It looks good. I think I like Fun's chart better though. Yeah, Fun doesn't look too bad. GME, 0.5% up. BBBY, pretty dead still today. At the lows, down 4.25. SMX giving back some of its gains. GTAI coming down some. They're still at the high, 7.7%. That looked like a blow off the top type move on SPY there. How quickly it went up, then how it went down even faster. Now we're lower. Lower than open. Two lows on the SPY. I don't have margin for futures because the nat gas is, I'm stuck again. Stuck again. Gotta just commit to day trading the futures and not trying to swing them. Help me with my entries at least. I bounce a little bit there. Just past that pre-market low. GFAI climbing back up to VWAP. Got a bearish MACD on the 5-minute, right under the 9. Might be a nice short at VWAP. GTAI wicking around. Some X still up 6 1/4. SI's reporting. Holy smokes, we're reporting on Monday. Thought it was later next week. Makes my plays a little more sketchy. I was hoping to get out the profit before their earnings. Market. wait, have they not announced yet? Nasdaq's saying it's estimated for the 18th. Fidelity's telling me it's on the 17th. A little wick there on BBY. Zim 6.8, GTI holding up. Express 27%. Express is breaking out here, 30%. Lots of volume. Makes you want to get back into GME. Nah. Never heard of this brand they're acquiring. Bonobos. I'm surprised they're rallying on that news also. Usually the company acquiring actually goes down, I think. Maybe Brian Cohen was talking about Express. Keeping an SI over the weekend? Yeah, I think I might also. I mean, I have orders to close my covered calls. In case the thing rips, it'd be nice to have no covered calls. But I don't think it'll get low enough. So maybe I'll just close them by end of day. Whatever it's at. You might have been talking about Express, honestly. It's just as likely as Express as Boss or any of the other ones, in my opinion. Or Tupperware. American brand. Is that kind of a historic support here? This and Tupperware both are kind of interesting at these levels. Tupperware doesn't have history of like squeezing though. I don't think it's been in the basket at all. Yeah, Bed Bath getting a couple wicks up to VWAP. Express might wake them up. I haven't seen Express move with them for a long time. JP Morgan holding up really well. Boys is still buying. Yep, that's what you do when you got conviction, man. MCOM, another 5% down day.
But $114 price target. I mean, Steeple's got this right. That's a nice big breakout. Kevin, is there any sign of such a breakout?
Potentially. I mean, it's on an upward trajectory at this point in time here, Oliver. But with this chart, you have pretty much everything. Easy to identify resistance and support areas, cup and
Philip
handles,
Morris.
star patterns, you name it. But we're going to keep it really simple here. First and foremost, before we talk about that price target, we have to get through some of the easier resistance levels to identify. First and foremost, the first one that I would really be focusing on is point A, the resistance level at 104. We see that was the
30% on Express.
And we actually tested that high around 3 times between December 2022 and February 2023.
Wasn't a Terra front runner
actually
GME before?
And we did see the movement to the downside. That's when we go to point B. Point B, you can actually see that point of control is sitting at around $101.50. The reason being, there was a lot of trading happening during that range-bound movement that we talked about in point A. So yes, you could potentially see a situation where if it breaks through that point of control, you might get some momentum traders that start to buy the stock because they do feel like it could move to the upside. But then we look at point C, RSI, CCI, close to oversold territory. And it's actually been fairly reliable for this stock. Once again, it does not show or determine the amount of the movement that could potentially happen to the downside. It just says that maybe
this might be
a little bit overextended at this point in time. Maybe it takes a little bit of a breather. So keep that in mind. Even though we do see the RSI at those levels, we could see it pull back down to that $95.25 range. That would actually be healthy before it pushes all the way back up on higher volume. And if it pushes through that point of control, pushes through that resistance level, that could give you some confidence that it could hit that price target.
Okay, so pretty
keeps holding
well
the support.
Established levels here to the upside that might act as some resistance. So you have to be careful about that if you are super long the stock, but at least it gives you something to kind of gauge the potential for a major breakout if we get above
going for an aisle.
Let's talk Pepsi real fast.
Closed my GME calls this morning.
Already at 52
Get back in, I guess.
Already, and so Barclays raised the price target to $201. That
Green
calls
to GME is
9% above where it's trading right now.
You're long on them.
The company is down. Shares are down today for the same reason that Philip Morris is, profit taking in the greater consumer staples sector. But this analyst also kept an overweight rating on the shares and says that Pepsi is within the firm's staples universe.
The GFAI back to 100%.
The analyst thinks that names
like
with greater visibility to volume growth is best, right? And so it's either through enhanced category exposure or other factors that the company will achieve that situation, right? And so earnings come out at the end of this month for the company. Citibank also said something a couple of days ago, placed PepsiCo on its 30-day catalyst watch ahead of the earnings. And the analyst said that scanner data suggests that Pepsi beverages and Frito-Lay sales in North America could significantly outperform expectations. So we'll look and see if those numbers line up with that in the next earnings report at the end of the month.
Okay. So pressure's on here to deliver, but they have been pretty reliable so far. Bulls like the potential here for the stock. Kevin, are we still uptrending in this, or do we run into resistance at the old high?
We definitely ran into resistance here, but the stock has been very resilient. If we look at point A, the resistance level is at around $185. Tested this 3 times between November and December of last year. And if you're looking at support, it would be at around $177. But the big key area here for me, Oliver, is going to be point B. Our volume profile shows the point of control at $170.75, which is all good and well. That's going to be probably a pretty significant area of support. But if you look at that volume profile as you go down from where it's at right now, there's actually significant volume leading up to that point of control, which means it will be fairly difficult for bears to try to knock the stock down unless we see something very drastic happen. There have been consistent buyers at these price levels all the way up here, and that just allows a little bit more resiliency when it comes to this move and potentially a move to the upside here. But just continue to kind of keep that in mind. The volume does support a bullish trend. I also have an upward sloping line from the lows where you could probably see a little bit of an intersection at around that $175, $177 range. Last but not least, CCI is overbought.
What happened last night?
Overbought. Both indicators have been actually fairly reliable. When we do see a break in the stock, it does tend to test recent highs. So that's another area at $177. So all of these areas are kind of converging, if you will, when you're looking at the indicators. But once again, that volume is really showing me that it's going to be fairly difficult to try to break the stock down in the near term.
Got it. All right, looking pretty good. Just got to chug along through that previous high, but so far Pepsi has not let down, and the analyst doesn't think it's going to this time. Thanks, Renita Young. Thanks, Kevin Green. Appreciate it, guys. All right, some good charts to ponder over. Market meetups coming up next. Stocks red right now. We'll be back to talk about the fade since the
Google employees can no longer expense mobile phones if one is available internally. U.S. housing may see a 2008 style correction as 20% of the market could be mispriced. 20% down from here is still 80% up from a couple years ago. 80% of the U.S. labor force could see at least 10% of their work tasks affected by GPT language models. Three B's, one Y. New low there on BBY, new all-time lows. What a historical event that we've been experiencing day after day after day on BBY. Congratulations, guys. We did it here live together. 24 cents. Yeah, just this little intraday moves on CXAI are huge. 20% up to VWAP there. That's crazy. Green now, give me financial advice. I'm telling. Express 40%. Wow, dude. 20 to 40 quickly. This might wake stuff up. It's been a long time. We've seen Express move with anything else. It's waking BY up to go down. Down to the basement. Dollar shooting up there. Something with the bonds maybe happened. Excuse me. When this drop, dollar shot maybe? Yeah, a little bit. Maybe the bonds doing something weird. Bonds are dropping. I don't know. I don't know what that was from. There's a pop on GME. Al did it. It was all Al. SMX moving back up. I like it. AI coming down a bit. Still looks like it's repeating like this area right here. Even right here. Press 40%. Interesting. I like this on a long time frame Express. Like 2-year chart, 3-year chart. Just look at that historical support. Three B's, 1 Y. 23.99, guys. Did it. That much closer to zero. Not gas, we suck again. GME. We're on our journey. %30 again. %28%. Yeah. Wake on Monday at 70 cents. I might pick up some calls today. On 3Bs, 1Y. Big green candle on GME. See if it does anything. Looks like it's just dead. That is a doorknob though. SMX popping above VWAP. You have $300 that I can lose? Is that what you're saying? I'm sorry, I don't speak that language. Well done, Green Owl. Too bad you didn't sell a few shares there and short it. Been a great short. And I could have even done puts at 80 cents and done 3x my money. 75% just in shares. 70%. E for BBY over the weekend. Yeah, let's see. Let's look at the callsies here with that insane IV that never comes down. $352%. Let's see, let me look at the break even on here. So 50-cent calls, break even's 55 cents. Press 34, okay, it was at 40. I was breaking out there. Before closing, I dump it. We're so close to the actual bottom of zero. I know, only like 30% left, so looking nice. SMX 10% up. GTAI 5%, SI hanging out around $1.58.5. XAI might be a good short here. It's at VWAP. I'm back up. Tempted. I don't know. Things early. If I can get a fill. Fill. Take that fill for sure. $10 in commissions and fees. Enter this. The thing, once you get such cheap contracts, you have to get so many of them. Give me exposure to 7,100 shares, which isn't that many at all. Bed Bath at this price. Buy's coming down more. Yeah, new lows are on SPY. Bear flag breakout. 411.48. What do we have next? Or 1088 or so. There's a green candle on Bed Bath. There you go, MU. That a girl. Let her go. Let her go. What, 7,100 shares, 2K? Crazy. I know, it's crazy. It's crazy, Ace. Like, just how much you can get for such a little amount. When I bought in the other day, I'm like, this is insane. I literally, I think I had more shares than I did before, and I only spent like 4 grand. It's like, what the heck? Mark kind of gave back some gains there. My notes here. Turca, did I sell Turca at the bottom? No, this thing's just flushing. Yeah, I don't know why I wanted to get into this weird draw to it. OEV still looks nice. Like this one. Like GTAI we're in. Fubo looks good also. I was a little hesitant because this engulfing candle, but price action wise it looks nice. Still have this nice big RSI divergence here. Don't know why that moved, but wait, what? What?
The ego on you.
BBBY Fire Marshal Bill. Thank you for your gifted sub. Thank you, Ace. I'm not sure if I'm gonna be able to keep up your names, but that's a funny one. Hey, trader. There you go, Grunt. You can thank Papa Ace. New low. Look at it merely as historical records that we're breaking. The positive thing. It's historical. Think about ACB. Yeah. Weed play. I mean, we heard a good thing actually on what TD the other day. It was once it gets approved federally in the United States, if that happens, like, not going to necessarily be some Canadian brand or some other brand. It's going to be someone in the United States. It's going to be Philip Morris or, you know, Altria or whatever. Altria, yeah. It's going to be one of these that's going to make a lot of money from it. Or a new company. But I think with the weed stocks, the best thing was just trading when there was hype and probably just leaving it alone for now. Kind of like EVs, kind of like AI, but AI is probably closer to the beginning of the hype. This could last for a few more weeks at least. The GFAI happened. Yesterday's gains are today's losses. GFAI down 6%, but bouncing around that level we have there. CXAI hanging out below VWAP. Express still up 35%. That gas moving up a little bit. Bed Bath did bounce there a little bit. 5-minute RSI divergence, if that means anything to you. It did break the pre-market low though, and all-time lows yet again for 3 Bs, 1 Y. I have an order for some calls on 3 Bs, 1 Y. Some X holding up above VWAP now. Getty's up 3%. Like nice consolidation at these levels. UTII 5.5 still. Bibla. Pamela Anderson Therapeutics. Yeah, chart looks pretty nice. Oh yeah, I wanted to get some PDUFA exposure. Our man trading fraternity. Need to figure out which ones to grab some exposure on. I don't have a whole lot to trade with though, because of, I guess I could close my Tesla short. That's kind of silly. Even like a 10% move on Tesla is not that much on shorting shares. 10% on Tesla would be pretty large move to the downside. But anyways, I wanted to save capital for BBY. Save some cash. I'm not gonna tell you the exact strike. I don't want to be front run, but I'm looking. Yeah. Actually, I'm not gonna tell you. I'm probably not gonna get filled. It's a greedy. It's like if I get filled, I'll take it basically, but I'm not trying to get filled with the price I put. JP Morgan 7%, a tear 7.5. SI just hanging out. So I still haven't figured out when SI earnings are. Do you guys know? You look on, maybe E-Trade has it. It almost looks like they haven't announced yet. It says 418 pre-market on E-Trade. That seems legit, actually. I don't think they put it in here until it's announced. So that gives me Monday to close. So I'll wait before I close stuff. I'll keep it over the weekend. Yeah, Monday, yeah, 18th pre-market. So Tuesday morning. So Monday's your last day. Oh, thanks for telling me, Damien. Freaking jerk. Make me look all over the internet. Potentially getting to some very naughty stuff and viruses on my quest to find SI's earnings date. Only to come to find out that you knew it all along and were holding out. This tree's overnight snipe. Forgot that one. Gotta check. I don't know what you're talking about. Are you talking in third person also? Express holding out nice up here above VWAP. My size up 30%. SMX, nice little bounce. I like this one a lot. HSON. That the one you were speaking to yourself in third person about? Hudson Global. What are we talking about? Overnight snipe? Short it? Doesn't look very good. You're long on it until it flips? Sorry to hear that. BBBY down 6%. I think 20 cents is definitely in the realm of possibility. A long ways down here though. See, every 5 cents becomes a greater percentage. Just weird for math and my head and stuff. But yeah, now 20 cents is 15 cents or 15% down here. SPY flush and new low there. So probably not going to go by 5 cent increments anymore, given that that's 20% in a day. It'd be 20% today, and then from 20 cents down to 15 cents, it's going to be probably greater, right? So yeah, it's 25%. So
thus far, showing exactly what the Fed had said, which is that the banking system is stable and that there's no issues with solvency. But I'm a little more interested in seeing what the smaller banks' results are going to be. The bigger banks obviously were a beneficiary of what happened with Silicon Valley Bank. They were the place where people really felt like they're too big to fail, and our deposits will be completely covered if we go to these larger banks that are considered really important to the economy. So for me, it'll be interesting to see what some of the smaller banks did. And I think that's another week or so away before we get some outlook on that.
All right, and good points. And so at this point now, I'm also thinking about
most simple, most basic,
and how we are seeing yields moving
standard,
higher.
fundamental first thing to do. You want exposure to downside.
The market did turn negative after being higher early in the morning. Obviously, as rates creep higher, that spooks investors some.
It does spook investors.
However, since you're already long shares
earlier this week.
If you were shorting shares, you'd basically just be selling them.
Is expecting a recession. I think that the market is a bit spooked by that.
But yeah, on a different brokerage, you can short shares. If you have long shares on one account, you could short them on another one.
Substantial decline in corporate profits. So we should be expecting that. The other issue I think is worth noting is that, you know, we have inflation at 5.6% and the Fed funds rate at about 5%. We're still well above the Fed target of 2%. And then there's a lot of discussion of whether or not there will be a cut. I think it's really important to note that the Fed has never cut interest rates while inflation remains above the target Fed funds rate. So, you know, we really need to see that that kind of flip where the inflation rate is below the Fed funds rate before there's ever going to be a chance of a cut. But I think that the Fed has been pretty clear that inflation remains their main concern. Employment is showing a little bit of weakness, but not enough that I think would cause the Fed to really pause. And with this bank results, I think it's showing that the banking system has shored up, which I actually only think emboldens the Fed because, you know, it's showing that they were able to resolve the issue after the Silicon Valley Bank scare.
Yeah, without a doubt. And you made the point of J.P. Morgan.
I mean, you can't, that's up at least on the same brokerage, you can't short what you're already long on.
BlackRock and Citi doing well today. Another thing is consumer sentiment.
To short, you're selling shares, so
came in
you're long. your positive shares. To go short, you sell them. So
was above the expectations of 62.
you'd have to sell all your
The
shares
key is the
and then sell more to go short.
expectations. The 1-year
Right.
outlook for inflation
So instead of just shorting,
expectations
just
are on the rise,
cut your
and that
longs.
too could pressure
Is how you
the
get down to
markets, right?
exposure. Stop losing
Yes,
money.
absolutely.
If you want to hedge, yeah,
I'm not sure
or make money on
that
the downside,
that's actually
you could use another
connected with
brokerage in
reality.
short.
We're not
Or
obviously
just,
we've
yeah,
seen
buy
9
puts.
straight months of declining inflation.
What's nice about buying
The
puts?
last time we saw that was
Nat
back in
gas
the
is bouncing here. That's a good
1930s.
sign.
So this is
Nice
sort
about
of
buying puts
unprecedented.
on
I
a
find it hard to believe
account
that
where
we
you
would
have
suddenly see
shares
inflation
is it
jump
gives you
back
margin.
up again, and if that's
Lots
what
of
consumers
margin.
are expecting,
So,
I think that is unlikely to happen.
basically as if you were to sell the
that's
shares
actually
there.
a favorable outcome.
So you could use
if,
that to
if
then,
consumers are
you know, do whatever you want
largely
with.
getting more positive, but expectations for inflation are rising.
Good daily bottom in BBY
you
for a
know,
swing.
This is actually a good thing, not a bad
Yeah,
thing,
maybe.
because I
Might
don't
be
think
doing a
we're
little
gonna see
double bottom
inflation
thing here.
rise going forward.
There's
by
a
any
5-minute
stretch.
RSI divergence.
And that's not what the Fed said either. I mean, in those minutes, I mean, they were talking about while inflation is hot, I mean, that it's
I mean, it's trying to time the bottom a little bit here. It's not a great sign of reversal yet, but
1-year inflation number on the negative side of things, the 1-year rose to 4.6% in April.
that's what I was doing with my GME shares for months, was buying puts on GME.
I mean, it's not
it would give me
1/10 of 1%. That's
all my
a
capitals
full
if I sold my
percentage
GME
point.
shares.
People are really,
It's kind of what got me in trouble a little bit with futures.
In tune with what we've been watching. I feel like they're late
I was
to
able
the
to trade
game.
futures,
I mean, to have
which
such a big jump. Let's just get to some
was
of
fine
the,
until Nat Gas
stocks, too.
did that
I don't
move,
want to
and
leave them out. So you
I
have your
didn't
first
size
one,
down
Southern
after taking
Copper,
losses, and
SCCO.
after big loss,
Tell me
wasn't
about
just
this one.
size down your positioning.
So let's just look broadly.
And I didn't. I wanted to
couple
size
of
up,
sectors
of course,
we're really interested right
get
now
my
are
losses
energy
back
and materials.
faster, which is
The energy and
how
materials
you just
sector as a component
start
of the S&P
spiraling
is smaller in
into
market
losses
cap
and blow
than
up
Apple.
accounts quick.
So there's some opportunity here. And one of the things I like to point out is if you look at these types of materials, industrials, these cyclicals, they're going to have slightly higher PEs. And that is actually completely normal with cyclical stocks. When they are at their trough earnings, they tend to have the highest PEs. It's completely counterintuitive. So when we look at something like Southern Copper,
I up my price on my
where
calls.
we're going, what some of the key trends are. One of the big trends right now is EV.
I think I'll be able to get out of them on
EVs
Monday.
use
For break
substantially
even if I
more
need
copper, 3 times more copper in EVs
I just got the
than
May
in traditional
19
internal combustion engine vehicles.
calls.
So there is a rising demand for copper. And Southern Copper is one of the largest providers of copper in the world. It's trading at about 19 times. And so I think this is a very attractive play right now. I'm focusing on some of the bigger multinational players because we have a weakening dollar, so they will benefit. And this is a stock that I think kind of fits into all of those trends that we're looking at that could really benefit as we have.
No, he's not saying a day. He's saying a bottom on the day. I'm moving up a little bit here.
In the energy space, actually, energy materials way to make energy happen for us. And the last one was
Weeble's not
Leidos.
as
That's
basic
in the world of
as Robinhood.
industrials. Tell us about
It's pretty
NOV
simple
and
though.
Leidos.
If you go over to paper trading,
So NOV, looking again, like
here,
I said, materials,
and then just
industrials,
do
and
you're doing
energy are kind
stocks,
of
paper
plays,
trading.
so
We should probably
pick a
start with
stock,
that.
my favorite stock from each
There's
one.
options,
NOV,
like it just gives you
again,
default
falls into that
setups.
really high PE,
Day
but
traders,
again,
paper trading.
cyclical. So expect that sort of at the
I mean, it
trough.
takes time. It takes because there's you can customize it and set it up. Like it's definitely more powerful, more complex than Robinhood,
so
which is good. It's you want to be able to
increasing demand,
use it eventually, use all the function of it.
oil and gas. And this is a stock that is very attractive from that perspective, a leader in their space. Again, one of the larger players.
Yeah, INPX. This was one of the ones I was looking at for
taking advantage of those other
DUFA.
key trends that I touched on. So NOV
me
is
look at that and
definitely
see what
a
ones.
name that we're paying close attention to. And Leidos, I talk about a lot. It is my favorite stock.
I shared the video
in the defense sector.
On Discord.
Focused on cybersecurity and lots of other types of securities. It's not a name people talk about.
There's that. Okay, I'm just checking this out really quick. So I IGXT. This thing's up 14% today, though. EBS. EBS looks like an interesting one. DSMKY. This thing's an OTC though. All right, IONS I like. Let's see. I'm just looking at the notes here from Zip Trader's video. Okay, I bought IONS. MCRB too is kind of interesting. Got some MCRB shares. And then GXT. This thing had a huge move though. I got EBS. I'll just go with those two. That's good. I'll go crazy.
How are you feeling about the market?
I'm a little disappointed in the reaction to the inflation data we got. I really don't think it was the all clear that the broad market seemed to think it was, at least CPI. I mean, still very high, beat expectations by a tenth, and so the market seemed to breathe a sigh of relief, which will tell you what drives the market. It's not really the data, it's versus expectations. But inflation is still very high. You know, terminal rate for the Fed may have come down. They may pause, they may slow down, but inflation is still very high. We had good jobs numbers last Friday. Unemployment rate still very low. I don't know how that's really great for the macro picture.
Right, understood. Okay, and look, you know, to your point, you didn't get the all clear that inflation is finished, and even today in the sentiment number,
well,
the
GME gave up that bounce.
Jumped. So good point there. How about a firm? Let's talk about this buy now, pay later space. Your thoughts, Scott?
Yeah, we're going to talk about three stocks, and we're going to start with the worst, and that's a firm, and it's the worst by a long way. So as you pointed out, they're in the buy now, pay later space. That may sound like a credit card, but a firm doesn't charge interest. They actually get paid by the retailer. And in a rising rate environment, that's just a horrible space to be in. They also have just over $5 billion worth of total debt. That's horrible when rates are rising. And so you might think,
BBY
well,
starting
the
to barcode down
company's
here.
in terrible shape. That's not even,
See, it's
Nicole,
only
that's
down,
not even the
it's down
worst
6.5%.
news. Last month, Apple Pay said they're going to get into the exact same
Yeah,
space.
CXAI did an 800% move after hours alone.
Product. They're going to call it
There's new low
Apple
on
Pay
BBY.
later. And so that's just debilitating.
We were watching yesterday, and it was up
The
at
results have been
500%.
terrible. EPS this year is expected to be a loss of
From open, which was insane.
$3.14. It doesn't
Up
get
to
any better in
$9,
the
filled that
future.
gap.
2025 expectations
But then look at
still
this.
a loss
From close, so it rallied up a
$1.78
little bit in
share.
after hours.
You might think, given the fact that the
Here's
stock's
where after
down
hours ends.
70% over the
It's up,
last
I think,
12
like
months,
15% or
that it
something.
might be oversold. That's not even the case. The
4
relative
a.m.
strength
comes,
index is very near 50.
and
So
this thing
is
goes
a
up
sell. It's tough to short
800%.
the stock because the short interest is
800.
about 16%.
See.
But this would be a great name for buying a put spread.
718%.
Puts are very expensive, so I
Up
would
to
buy a put spread. But it's a
$69.
sell. It's a horrible setup.
And I think
This
you made a
huge
good
move
point about the
yesterday
short
brought it
interest,
from
that
what
always sort of
270
gives us a little telltale
to close
sign.
at 7.
Your thoughts, Ben?
Yeah, I think Scott's point
And then it went from
about some
7
of the concerns in terms
to
of
69.
guidance is
Way up
what
here.
we're seeing investors express
And
this
then back
bearish
down here for open.
response too. I mean, this stock's been coming under pressure for a while, though, since the beginning
Yeah.
of February. I think
Yeah, it is like
where I'd to
HKD. It's
begin.
really the only thing that's we've
Scott,
seen
two
1000%
things. One is the
moves
three
after
names
hours.
we're going to look at today, very similar in
GME,
chart
I think
patterns,
GME
right?
did like
And
400 or
two,
500%
I wanna
was
push
the
back
biggest
a little
move it
bit on
did
the
after
all
hours.
clear here. I don't think that we've seen that yet. I think above 4,300 in the S&Ps would signal the all clear.
New low
right
on
now. We're just kinda
BBY,
near the
new
upper
all-time
extreme of
low.
that range. But let's dive into a firm here and some of the selling we've seen from 22.75 all the way down
got
to this
calls on
$9
it.
level into the end of March. We're sideways here, kind of, well, teetering around. Let's see. We'll call
I
it
don't think I
11,
could have gotten them
right?
for
But
cheaper.
you can see the
Still, at this point, we'll
well-defined
see if
phase
that
of development
changes
that I
in the
look
next
for,
few
and also you
hours.
can see migration of value. This is, again, a well-defined trend lower. There's really no question here, and there's really no rejection
At which
as of
strike
yet.
price
So
should
the bears are looking
BYB
for this
today
thing to
for the
roll
puts?
back over,
What do you
break
mean?
down below 11s, that pivot here, and ultimately that could
What is
open
the
up
Williams
a door for a
percent?
retest
That's
of
just a
9
technical
and
indicator.
potentially beyond, because that's what they're really looking for is another vertical phase lower and then balance to form at a
Let's see
lower
what it
level
is.
to solidify that working assumption that, well, here's just hourly candles, but value is
7%
moving
theory
lower.
confirmed.
Now, I want to
Yeah,
go
even
all the
hit
way back
8%
to the
there.
end of August. The stock was trading up around 41. This is the move we just looked at really coming into play here, and you can see it's just a blip on the radar as far as the longer-term selling that's been going on. So you've got an intermediate trend to the downside, a long-term trend to the downside. In this balance area that we've been in basically since September of last year, we've been kind of teetering around 14. Look, we're struggling to get above it. In the beginning this year, February, retested it, so really no indication that we have any inkling to get back up above and through that level. And then just quickly, look, struggling to
GME is
get
now
above the
red.
50. The 200 hasn't been an issue for a while. You can see that test that we saw, the spike in February, but even
BBY
that
almost
was
down
short-lived. I
8%.
mean, to Scott's
Might get
point, I
some,
think
like,
the fundamentals
options exposure
very
on
much
Tesla.
support her. I'm not sure which came first, the chicken or the egg in this instance, but they both are very bearish here in terms of the technicals and the fundamentals, I would argue.
Yeah, and that chart really show each
on,
leg
Gas, you
down
can do
and
it.
just the struggle to stay above the moving averages, to your point, Ben. Thank you for that. Any final thoughts, Scott, on a firm before we move on?
Well, the only thing I would say is I would not just short the stock, because with that short open interest or that short interest, it can pop on some sort of short covering rally, and you can get bought in. So that's why I would suggest some sort of option strategy instead.
All right, let's get to the
Fucking
next
a
one.
firm.
Harley-Davidson. So,
Don't usually talk such
this one you think could
low
move
cap
higher,
stocks.
Scott. Why?
Market cap's
Yeah,
actually
well, the
3.2
stock
billion.
got hit yesterday, and it's getting hit a little bit today.
It's a
Yesterday, the
squeezy
news
stock
was
for
that
such
the CFO was leaving.
Big market cap.
And that was a little goofy because she'd only been at the company for about 2.5 years. But she's leaving for Hasbro, which is a really interesting situation. So she's leaving for another opportunity, which meaning that the break that we saw yesterday and today is overdone. I would be worried if she was leaving after 2.5 years to spend more time with her family, quote unquote, but she's not. She's leaving for a different opportunity. So this is overdone. The company had good results in early February. Revenues were $1.14 billion versus under $1 billion expectation. Forward PE is less than 8, just a little bit less than 8. EPS growth is expected to be pretty good in 2024, 2025. And so I think this sets up well. There are concerns about the demographic worries that the demographic is aging out of motorcycles, and also their live wire EVs are still producing a loss. That's unfortunate, but that could also be a really neat business for Harley in the next few years.
All right, thank you for that. Look, you know, nobody loves to see, as you said, Scott, when you start to see the C-suite changing, particularly if it's a short period of time. Though this has been an interesting, different time, like none ever before. Ben, your thoughts on Hog?
Well, the first thought that came to mind in terms of Hog is just some of that consumer spending, right? We hear about all these inflationary pressures and ultimately economy slowing, lending slowing. So it might be even harder to get a loan for one of these motorcycles. And, you know, Scott mentioned some of the overdone weakness here was the word he used. I think overdone, he said, to the downside. And let's just take a look at how we're seeing some of the selling. While maybe overdone, we haven't necessarily provided any indication that we're rejecting it as of yet. That's what I like to look for. I want to see the tides turning before I kind of, you know, jump out on a limb on this one. And at this point, value is still moving lower, right? One thing I did notice, we tried to break out here this week, tried to get down to that $34 level, take out the lows from, well, we're going back to the end of March here, and it failed, right? So right back into that range. So now we have a well-defined lower extreme, but still kind of within this range. You can see the high conviction that we saw into the first week of March. So we broke down through 45 after balancing around 48. And here, just kind of the staircase type pattern. So at the very least, until we break out up above 40, that'd be that first indication that we're starting to reverse this trend. We need to get above 38, obviously, before that. That's the pivot area here. And again, these are hourly candles, so I don't want to make too much of this downtrend here, especially when you've got this to look at, which is along the lines of what Scott's talking about, a more longer term uptrend, right? So on the longer term, you're favoring a long-sided position here versus what we just looked at in terms of the short term, the hourly. Even within this high conviction move up that we saw into the beginning of 2021, the sideways consolidation since, you can see a pretty well double top, defined double top up here around 50.52, but notice again, still below this 41 area. So here's that elevator shaft that we just looked at the beginning of March and the selling that we saw after we failed up around 51 again at the beginning of February. But taking a look here real quic, I want to show you where things are in terms of the 50 to 200-day moving average, a stock that's below both the shorter
What's the told you
and
so,
the longer dated.
Fire Marshal Bill?
Kind of rolling over here, but I like what Scott's talking about in terms of the potential to see this thing turn around based on that longer term trend. But I'd want to see something on the hourly
coming down
first before, from a technical standpoint, I said that the worst is over here.
BBBY down 8.5%.
Yeah, and you showed that level of 41.
New all-time
I
lows.
see you there. You have the 51.
This is so exciting.
Recent
Gas is
high.
rallying.
And,
Thank you.
You know, who doesn't love a great American company like Harley Davidson? But it just sort of came and went and came and went. You know, the baby boomers were aging, it was being aged out. Then they tried to make a bike that was for women. You know, there were semiconductor issues. There were issues to Europe. I mean, it just feels like there's love and then no love for this company and this back and forth. So, but I will say Bank of America has a buy.
He said it was going to be
rate. They brought down the
bankrupt in
target
6
to
days.
$55 from $65. Final thought, Scott, on Harley Davidson.
420.
This is a great brand, one of the best brands in America. Companies trading at a reasonable value as far as a PE. In fact, I would say
Harley
it's
Davidson?
trading at a discount. And over the last 2 days, given the
Best
price
brands in
action
America, you say?
based on the news that I mentioned, it's trading at a even better discount than it was last week. So not only would this be I think this is ready for a short-term pop.
Yeah, interesting. And, you know, both these names, Harley Davidson, your next one's Delta, you know, this as we see retail sales and what consumers are doing and actually,
He said it's going to be bankrupt by 420 though?
You know, are people spending? And you need them to spend to buy a bike or to get on a Delta Airlines
Or you think it's going to confirm it's not going bankrupt by
Delta
420?
Airlines, Scott.
Yeah, this is a buy as well.
Don't
And
have to
this
do
is
that.
another name that got hit yesterday. It got hit because of disappointing earnings. They actually
Oh, I
posted a
see.
loss, largely because of one-time
6 days has
events.
nothing to do with anything.
The biggest one-time event was a new pilot's
No
contract,
green
and I
sight.
think that's actually
Yeah, this
wonderful
is
news
honestly one of
that
the
they're gonna have
most
labor
insane
peace
charts I've
going
ever seen.
forward. Even if you back out the
talking about it
one-time,
yesterday, like-
numbers, they disappointed a little bit.
I don't think I've ever seen
results
something
were
like this.
25 cents. Market expected
This is
29
an
cents.
amazing
The
short.
problem for Delta
Like,
was that Delta had been
no-
guiding at 25 cents, so the analysts got ahead
No,
of
no
the
fear
company,
of
and that's
any
why
kind
it
of bounce, like
stepped
just
back
the most
yesterday. Some of that's coming
sustained
back
drop in
today.
share
It's up
price
a little
with
bit today. PE
like just the perfect
barely
amount.
above 6. So I think
You know,
this is a
just
relative
perfectly
bargain.
grinding down a moving
Planes
average.
are full.
No
Planes
bounces,
are
no fears of
absolutely
a
full,
rally.
and
Just
all of the airlines, including Delta, doing a good job with capacity discipline. They're going to continue to do that. So the biggest problem for Delta is that if analysts get overly optimistic and bid up the stock, and then the company matches their guidance, then we're going to see a downdraft. That's the biggest problem. Otherwise, the company's in very good shape. Planes are full, fares are higher, and capacity discipline really helps them maintain that.
Right, right. Thank you for that. All right, Ben, take us through the technicals on Delta, please.
Well, I mentioned at the top of the hit that these are 3 stocks that are in a very similar pattern when we're talking about the intraday time frame, the hourly. You're going to see this kind of hockey stick pattern play out here where we sold off down to $31, traded sideways since, but high conviction to the downside and overlapping rotational wide range from 35 to 31. Taking a look at some of the areas of consolidation. Nicole, you mentioned some of the concerns about that consumer spending. Well, the CEO, I heard he pushed back big time. He said consumers are prioritizing travel. Yeah, there's some concerns about spending, but they're not necessarily going to struggle. And to Scott's point, some of the guidance numbers I saw were pretty good. Summer bookings, I think, were at records. But take a look, because it's not just the high conviction move here. I can show you this, that you get that big move lower and sideways consolidation, but this plays itself out multiple times on a reoccurring basis. I'm just going to kind of draw a few of the moves lower here that I mapped out that developed. And so this pattern, you'll see, again, here it is, just sort of me drawing it. This isn't a study on the TOS platform. I've got an actual funny story for you, that, Nicole, as I just sort of chart this out. You can see the conviction of the downside, but one of the trade desk guys stopped me in the hallway and he said one of our viewers, he was on the phone with a customer and he asked about these studies. As I pulled them up in the bottom right corner here, you can see on the daily time frame, conviction to the downside, migration of value. And he asked where to find this study where we draw these levels on the platform. And I told him this was just, hey, this is just us drawing them, right? I mean, this is just us looking at price and establishing the migration of value. And in this instance, again, to the downside. Look at this, teetering around 34, the middle of the range that we're in right now. And lastly, where we are relative to the 50, the 200. Below the 50, hanging out right on the 200. This looks more like a puddle jumper recently than a high flyer to me. Look at Delta currently trading up on the day, up, or I should say 2.5% on the year, up on the day about 1%. So keeping an eye on this, but kind of in a range and just not a lot of conviction here. This sort of longer term trend that we've seen to the downside.
And you draw those great. We love how you draw those. Look, how do you draw those? Well, you know, could be 10, 20, 30 years of being a trader and having the experience, and that's really, you know, where it comes in.
I told him this doesn't come from the platform. I told him, Nicole, this comes from the heart.
This dude's trying to get on TV back there.
Right? And it makes you nuts, but I get it. I get it. And that's why we keep showing up. Scott, final thoughts here?
Yeah, you know, we often love to be short stocks or buy puts because we, you know, when they pay off so big. But the market tends to go higher. Good stocks tend to go higher. We don't have to outthink ourselves here. And I think Hog and Delta, those are good stocks that are trading at really reasonable multiples that are going to do well.
Right, understood. Thank you so much, Scott Nations Indexes, and our own Ben Lichtenstein. Thank
Lichtenstein
you
on the charts.
All right, coming up next.
On the ones and twos.
Season is underway. Shiraz Mian.
Ones and twos charts. 78% of Americans do not feel confident that life for their children's generation will be better than their own. The highest percent ever. JP Morgan shares set for biggest percentage gain in over 2 years. That's what I was looking at. That's a big move on JP Morgan. Gold falls over 2%. Well, you're getting a massive dollar rally here. So dollar is still inversing the market. That's still playing out. Yeah. This is looking like a double bottom here on the dollar. Market come down time. And the VIX level. VIX was like right at support yesterday. On an upward trend. If I can get out of the nat gas, I'll never trade it again, I swear. I'm just kidding, I'll definitely be back in it. but I would like some big ES exposure for what I think is shaping up to be a nice double top on the SPY. Gonna move back down. 7% there. Not bad. On 200K, that's like, what's 17,000? Something like that. Get back those losses I have. What is it? 14,000. Still be down.
29 and the Russell at 1780, losing almost 1%. A look at developing stories now. I'd like to bring in
this chart is so nice,
like
an seismic
here
chart.
on the TD Ameritrade Network, and we have Boeing weighing on the Dow Jones
Almost
Industrial Average this morning.
Nice.
737 MAX issues. Tell us more about it, some of the details.
Yeah, definitely. So Boeing is actually halting deliveries of the 737 MAX after being notified of an issue with their aluminum frame, basically from a company that builds these out, which is called Spirit Aerosystems. And the impact could actually impact airlines or airplanes that have been manufactured since 2019. So right now they're kind of going through trying to assess
right
the
now
damage.
I buy the,
and they are saying
you
that
set a
they
stop
do
loss?
expect that deliveries will be delayed in the near term.
Make the buy. I
Obviously
think you can do it in one
some of the airline companies that are out
as a
there
part
as
of one
well.
trade.
We actually see Boeing
When you
down
buy
about
it, you have a
6%,
stop loss
Spirit
also.
Aerosystems down about
you
19%
shouldn't need
on this news. But what's really
you shouldn't need to
interesting
do it
here,
all that
Nicole,
fast. You should be able to buy it
about a month
once the
ago
position's
to today,
opened,
actually, they
and set up your
announced-
stop loss
Boeing
wherever you want
announced
it.
their the fifth largest commercial order
You
from
shouldn't need to do it in one
Saudi
trade.
Arabian,
That shouldn't be
airline
necessary.
companies here, and it was a huge boost for the stock. And unfortunately, we get this news today, and it pretty much has erased almost all of the gains from that news. And it just seems like we've seen this trend before, where they announce some really good news, and then they have some bad news 2 or 3 weeks later. And so sometimes it's probably just better just to perform and not announce everything that you're trying to do. But this is weighing on the Dow and weighing on industrials in general here.
Without a doubt. Thank you for all of that. Really appreciate it. Kevin Green, Senior Markets Correspondent for the TD Ameritrade Network. All right, it is time for our spotlight on earnings season. We are kicking it off in a big way. What can we expect? Let's welcome in Shiraz Mian, Director of Research at Zacks Investment Research. Thank you for being here. So, the banks kicked it off this morning. What did you learn?
Big sell-off from FFIE yesterday.
I think it was a sign of
whoever's in that took some profits.
These are obviously the best quality
Still looks like a good trade,
members
maybe.
of the banking group. So no one expected the issues that have kind of taken a center stage since the Silicon Valley.
On the day of the split, I'm definitely not going to be. I'm going to probably short BBY actually.
Present with JP Morgan or Wells Fargo. So sigh of relief, and then on
There's
top
only a couple
of that,
examples of
there was some
stocks ripping on the split day.
Well. Margins were
Glad
up.
I got out of Rivian, dude. Oh my gosh.
Net interest income for JP Morgan, and what they're guiding to.
Wow.
It's pretty strong. The consumer is good. Businesses are good. And yes, some clouds are on the horizon, as the JP Morgan report refers to as well. But on the whole, there's nothing imminent that should worry a cyclically levered business like a bank.
All right, because we're getting a slew of those next week, too. We'll have Morgan Stanley, Citizens, U.S. Bancorp, Truist, Comerica, KeyCorp, Fifth Third, just to name a few, Huntington as well. So, this is going to be, the regionals may be a different story than some of the big, large money center banks. Sure. What are you expecting overall for earnings season? I mean, we're getting in a lot of pieces of data as far as the economy.
It's not dead. I mean, the stock.
Some weakness and pullbacks. I mean,
the more the stock comes down on a company that's not dead, the better it is for Not an arbitrage play, but a mispriced stock,
there is this
which is what you want.
in the market that estimates are too high.
So,
but I've consistently been writing about it that is not.
Nothing fundamentally is changing, but the stock just keeps getting pummeled.
Estimates had come down.
But yeah, I mean, it could be from dilution.
Relative to historical
could be from
periods,
shorting.
they were on the above average side.
Probably
the
some
cuts
of both.
to the Q1 estimates relative to the last couple of quarters, the second half of 2022. Q1 estimate cuts were relatively smaller, but on the whole, expectation was for about a 10% decline. It's now 9.4% for
GME's MACD
S&P
flipped bearish
500
yesterday.
in Q1, and roughly
the market,
2%
I'm thinking the market looks like it's probably going to come
Tech is a
down.
big drag. Finance was
So I'm wondering
expected
if
to
GME's
be
not gonna hold
essentially
levels
flat. But now it's relatively better now after these this morning's earnings releases. But on the whole, if we are not heading into a nasty recession, then I think the progress we have made with respect to revisions and estimates for 2023 as a whole, I believe is fair. And the bulk of the revisions most likely are then behind us.
Understood. So as we talk about guidance, some of the companies don't even give guidance, but the sector to sector, do you think there'll be a surprise sector that wows everybody in some way?
So you mentioned the regionals that will be reporting next week. There's a lot of anxiety about them. In the aggregate, there's it makes intuitive sense to project that they will be less profitable going forward than they had been before. So to the extent that we get positively surprised from the regionals is not something that's priced in. And it wouldn't take a lot to make the market happy from the regionals, but that's a toss-up in the air right now. I think the bigger question for Q1 earnings season as a whole as to what we hear and see from the tech sector. That's a big chunk of the earnings pie as a whole, a big chunk of the market as a whole, and the group has had a pretty good follow through this year. So my sense is that numbers will come in reassuring enough. But if there's any slip up on that front, then that may be problematic for tech as well as for the broader market.
Yeah. I mean, you talked about from the April 2022 peak that many of the sectors, including technology, you had that, we've seen that one fluctuating, right, when we first saw it moving higher. But since that peak, key sectors, tech, retail, construction, consumer discretionary, have declined in excess of 20%. I think also margins are going to be a big story in how, how these companies are being squeezed and what kind of margins they're seeing. That's another big theme, right?
It is, yes. So for Q1, the expectation for net margins is a roughly 141 basis point decline. This will be the 5th quarter in a row of declining margins for the S&P 500.
I thought shares PTPI. Jim, you got to scale, man.
These companies
after GFAI, don't you see this? What scaling would have done?
The higher cost of doing business, whether that's inputs or payroll,
news?
To the end consumer, and in a kind of related way, that's a positive and favorable from the Fed standpoint, meaning that it's keeping a lid on inflation. So margins are a big piece, and again, as you were discussing earlier,
so they had
with
a
respect
is
to
back here,
tech and the expectations for tech. Tech is the area where margin is a big drag on the sector's profitability. So yes, how the margin picture evolves.
You don't need to hold tight. Just know how to scale. Just sell a little bit at a time.
How management teams discuss trends in their underlying business, including
yeah, I like SMX.
All will
still
be.
do.
Will be
it's had a big move,
how the revisions
like the fundamental
picture unfolds. But as you pointed out, Nicole,
going after naked shorts again,
earnings
legal stock
estimates
trading
for 2023 peaked in
and then,
April
of course, like the chart too.
2022, about a year ago.
Getting up this resistance at 2.7, so
coming down.
might slow down here.
Down in the aggregate
We'll just see. But then after that, I mean, 4.7 is the next level, which is
since that point.
That's almost double from there.
Traditionally,
And then 6.2 from there.
From peak to trough, there is a
moves up it can still
20%
make.
decline on average ahead of a recession. If we are heading into a garden variety moderate slowdown or the so-called soft landing recession, then 14-15% seems reasonable enough. The folks who call and see estimates as too high are the ones who are expecting a tougher going for the economy as a whole. And if we are heading towards that, then obviously estimates are too high.
All right. Shiraz Mian, thank you. Zacks Investment Research, really appreciate you being on today. Thank you. Coming up next, George Sells will take a look at ServiceNow after a big price target boost over at UBS. He'll break down that report and show us how you could trade it next on Trading 360.
The ego on you.
Dang it, someone put this fire out. Fire Marshal. Gifting 5 subs. 5 memberships. Thank you, sir. Appreciate it. Mazamis, Desic. Who are you people? Merrick, Aaron Croxton, J2DP. Yeah, we just pulled all of y'all out of your zombie slumber. Get on chat. Come thank BBB or come thank BBY Fire Marshal. Papa Ace. AKA no stop losses. No sells. Thank you, Ace. Caught me eating.
The ego on you.
That's how I feel when people interrupt my food. Got him. I think you probably gifted memberships to like 5 bots. There you go, Mazimus. Coming out of your slumber. Express 30%. GME a little bounce here with the SPY. CJ, you're saying dollar's gonna have new lows? 101.88. Yeah, it's short term. Yeah, a low, but on the daily, this definitely looks like it's double bottoming here. X 18%. Let's get back to that 60% we had pre-market. Yeah, the re-entry. Can't do the re-entry. Once you make those gains, you gotta sit on your hands. Don't redeploy it. Put it in another account even. Put it in an investing account. Get it out of your sight. Make it yours. Don't ever say house money. There's no such thing. If you're actually playing with house money, you're a thief and you stole it. If you're playing with something that you won, you earned, yours. It's not house money. Kirker's brought to the light. Ah! New all-time low on BBY. Congratulations, everyone. We're here together for it. 23.41. BBY Fire Marshal Bill is A's? Yes, sir. Done full alert. Yeah, that's true. It's nice that she's doing interviews, I guess. She's, I wouldn't say she's the best at interviews, or I guess that form, but that doesn't necessarily matter. New highs on SMX. There it is, breaking out, up 23%. Breaking that resistance we have there. $2.80. 27.74 was the support there that meant for resistance, and it just broke that. So that is neat. Thing hit like 360, 370 pre-market. Bull times in bull market. Yeah, stuff's been squeezy. Last week has been just, and then we still have all the PDUFA stuff at the end of the month. So these biotechs and stuff and pharmaceuticals are gonna get squeezy also. $27 there, do it. $30. To face an potential hero or villain. Miss 20K is hard to swallow. Some might even say that's worse than losing 20K. I missed out on 200K on GME on an overnight options play. Show you the day it was. Had exposure and cut out. It didn't scale. Didn't scale. That one? No, it was earlier than that. I think it was this one. Yeah, it was a while ago. Yeah, I think it was this one. Had tons of exposure, made maybe 20,000. And if I held this one, which one was it? If I had held, oh no, it was way earlier. It was this one. If I had held, it would, the next day it literally would have been 200K worth. So scaling helps. Could have realized maybe 5K that day, 10K, and then maybe 100 something the next day. So that's a tough one to swallow. I don't know if it's worse than I don't know. I felt basically both those emotions on GME, as far as missing gains, and then I never lose that much that quickly though. It's just been a slow death by 1,000 cuts. So never the huge hit of emotion like missing out. Man, that was probably the most insane amount of emotions I've ever felt. The next morning, I was like pacing around, sweating. SMX, little red candle there. Be nice if it held support above that 27. Big hugs. Were you an SMX? Well done, sir. Well done. You're scaling because of catching falling knives? Well, that doesn't make sense. You're talking about scaling in. Scaling in should work the same way as you buying in. So when you want to buy and do it in one order, I mean, it depends on how you're trading. If you're just scalp trading, which it sounds like you're mostly doing, you can still scale in. I mean, even the best scalp day traders, they scale in. They buy some, and as it goes up, they keep buying. But it's just in a much shorter period of time. You know, it's within a couple minutes. But same with the exit. But if you're open to having exposure for a swing trade, I think the scale in could be quicker if you're going to look for a swing trade to exit, because you want to let your winners run, and then just, you know, have risk management for what you're willing to lose on it. Don't let the losers run. Kill losers quickly, I say. But to let the winners run, you know, take some off and just keep taking it off as it keeps rallying. I'm saying that as this is rallying. I'm not taking any off. So that also has to play in with, I guess, other TA and support and resistances and stuff. This one, I just don't want to have to get back into it. That's the thing. Because I see this as coming up and filling this gap at 6.2. So but yeah, just because you're scaling doesn't mean you have to be catching falling knives. Like, you can wait for the reversal. Just instead of putting everything you want into that play at one time, just spread it out. Trick. Holding as it drops. It's not a falling knife if it's had a huge rally and it starts coming down. Falling knife is coming down and continues to come down as you buy it. Still, it's coming to quit her job, keep you out of bankruptcy. How do you know she's doing an awful job? Based on the stock price? Oh, you have Helby's losses too. Buy a new low there. Bitcoin could still keep rallying, I think, with kind of the bank fear going on. But with the market coming down potentially in a crash, it's hard to know, really, if it's going to come down with the market. I mean, typically it would, but or even come down before. B is 1Y. Little bounce here. Not a bounce, but it looks like it's maybe flattening out. Might be the low of the day. You want to day trade it, rally or wherever. This looks like probably the low. What was your plan when you opened it? It's had a nice breakout there. Did not engage with the shareholders? So you must really hate Ryan Cohen then, or think he's doing an awful job. I guess I wouldn't judge a CEO as good or bad based on how much they engage with shareholders. That is one aspect that I think should be done, but I wouldn't, I guess, solely base it on that or have much weight on that. That's to me, that to me is pretty far down the list on things they should be doing as far as their fiduciary duty as a CEO or president. CXAI coming down here. New low on the day on it. Filling this gap maybe. It does kind of double bottom. This might be a nice pickup. The long side. Adam Aaron is a jabroni. Everything is not a secret. They've been pretty forthright about what they're doing. I mean, mostly with filings, but yeah, they haven't been very whatever if they're holding anything back, it's probably because they legally have to. But maybe there's not. Maybe you just think they're being secret and there's nothing going on. That's because you're reading into it, flavoring. Nothing's going on with it. Trusted CEO to take it to the moon on e-scooters. It takes NFTs to buy whiskey. Alright, BBY, it does look like it's bottoming here. I'm probably not going to be swing trading any shares though. SMX coming down. Like to see it hold support onto breakout level. SPY starting to move up here a little bit. I don't know if they could sell it off or not. If they could, that's pretty dumb they haven't already. Unless if there is some secretive plan going on behind the scenes that we don't know about. Or they're not able to because it's held as collateral for their debt. Which one would say that they could just take that and get their debt paid off, but yeah, I don't know. Nice.
Good shape. That's good for the overall economy. Then we got to some of the data, which
thanks for guys, thumbs up. I appreciate it. Pretty weak today, but I still appreciate the ones that you guys have done.
Significantly weaker than expected, down 1%, down 0.8 if you use X vehicles. And then we got into consumer sentiment, which was higher.
My loss to the dark
what
pool.
does all this
big brain
data mean?
moves
You got
there.
news from Boeing that's weighing on the Dow about 70 some points, is weighing on the Dow. So you take all this together, Tom. We've got major indices lower on the day. We've got crude oil a little higher. We've got the dollar a little higher. We've got yields a little higher. Those three things, from a macro perspective, don't spell good things for a stock market that's rallied quite a ways, Tom. But relief from the banking sector, issues everywhere else.
Yeah, I'm kind of surprised that with the rising dollar and those rising yields that equities actually aren't doing worse than we've got today. But you did mention that Boeing news. They had some issues on the deliveries of their 737 MAXs. Let's bring in Caroline Woods, senior markets correspondent here on the network, to help us break down this story, because it's not only a Boeing story here. It's Spirit AeroSystems also, correct, Caroline?
Yes, and Spirit AeroSystems taking an even bigger hit than Boeing, down more than 20% on this news. But as you said, shares of Boeing off about 6% today. The biggest drag on the Dow, so offsetting those gains from JP Morgan, kind of balancing it out there. But yes, the news is that Boeing announced that it's halting deliveries of some of its 737 MAX models because of a manufacturing, or really a parts compliance issue. Boeing was notified of the issue by Spirit AeroSystems, which assembles most of the 737's aluminum frames. It affects a portion of 737s built since 2019, including the MAX version. It has to do with fittings that attach the jet's vertical tail to the rear end of its fuselage amid non-standard manufacturing processes. Boeing said the issue will likely affect a significant number of undelivered 737 MAX airplanes, both in production and in storage. Not exactly news that investors want to hear. In a statement, Boeing said, "We regret the impact that this issue will have on affected customers and are in contact with
this will just be a day trade.
Schedule.
I'm gonna have a stop
additional information in the days
like down
and weeks
here.
Ahead as we better
Break this low.
understand the delivery.
I think it's maybe double bottoming here.
I do think it's important to note the issue does
Kind
not
of time at the bottom a little bit, but day trades are kind of
in the air, so its in-service
run a little
fleet
bit.
can continue operating. Will likely cause deliveries to decline in the near term.
Looking for a move to VWAP or whatever.
Inspects these
higher.
affected aircraft. Obviously raises questions about Boeing's overall ability to increase production this year as well. Likely why we're seeing shares off more than 6% right now. Spirit AeroSystems, as I said, down even more, down just over 20% today.
Caroline, when you look at a company like Boeing, and none of us here sitting on the air can fathom how many inputs and how many different suppliers they rely on and group together to build a plane. And this is just an example of the logistical problems
you've done really well,
that
man.
come in
You definitely have to be
with a complex structure like a Boeing 737. But this also highlights the problems.
Looks like it might be trying to hold that support, which would be very good.
All these issues that can possibly come up along the way, Caroline. When we think of all the inputs in a plane, you know, Boeing was, you know, getting their
Flushing down
production
there.
of the 737 MAX from the 20s into the low 30s, and now this is going to put a temporary lock on that. Like I said, Boeing has taken about 70 points out of the Dow. It's not really their
that's
fault.
Not BBY's fault necessarily.
They're
that's the investor's fault.
And we, as a consumer, are married to two firms, right? It's Airbus and it's Boeing. There's no one else to make airplanes, Caroline.
Well, I think if it was easy, you know, if there weren't a million parts and suppliers involved, more than two companies would do it, right? I think that really just drives that point home that only Boeing and Airbus.
It was only speculation that Hudson Bay is not on it. Their name was on the actual paperwork. It was just hype and speculation and people hoping it wasn't. So they were saying, "Oh, it's not them."
They are set to report earnings on April 26th, so we'll likely learn more.
You're
but regardless
clouding
of
your
who,
judgment
you can
based on
point
what you've learned on
fingers
Reddit
at
and
in
thinking
terms
that
of is it Spirit AeroSystems. It's
that
definitely
is
looking
it.
like Boeing.
Or
the stock is
as you've heard on
taking
Discord
a
or
hit because
whatever.
of it, because at the end of the day, they're
Anything that's not
responsible for their
real or
deliveries.
from them.
We did see some analysts come in
You're
and
putting
comment
weight to
on
that.
this. I didn't see any downgrades per se, no price target cuts on this news, but just analysts more or less saying just when Boeing was starting to get the momentum back, this happens. We saw JP Morgan weigh in, really noting, though, that the financial impact will weigh heavier on Spirit AeroSystems. It believes Spirit is struggling with execution across the portfolio, said this must improve
coming
to
down a
win
little bit
back
here.
investor confidence.
GFAI not looking too strong yet on a little double bottom.
On both Boeing and Spirit AeroSystems. Wolf Research says the news comes
given
just
it is a
after
Friday
momentum
and
was
it's did
building in the right
go up
direction, but
800%
also
pre-market.
points out that this is will weigh heavier
Run
on
might be
Spirit
over for this
AeroSystems,
week.
and actually is cautiously optimistic that Boeing could still hit that 400 to 450 delivery guidance.
Might hold some shares into close though, or
the extent of
extended
the
hours
rework required.
for next week.
It does point out, though, for Spirit that the financial exposure is more material given its still negative free cash flow profile and overextended
I don't know if Hudson Bay Shank does. That's speculation.
In terms of Credit Suisse, they
seems
made
like
no
they
change to its
made their
neutral
money
rating on Boeing,
and then
$220
BBY terminated it,
price
but
target. So it doesn't
I'm
seem
not sure how
like
it'll play
analysts
out.
are getting super
Like any of us are.
bearish on this news, but we're definitely seeing it hit the stock price. So let's see what Boeing has to
Good job,
say.
Jim. Well done,
quiet
bud.
period ahead of earnings, but we'll hear from them soon. So let's see what they have to say, if they give us any more clarity about just how much of an impact this will have, especially on those delivery numbers.
Yeah, I think the key takeaway on this
If someone
report is
tells
that
you that the
Boeing
sky
stated it's
isn't
not
blue,
a
it's
safety
red, and
issue for
convinces
the
you over and
planes.
over,
So
shows
maybe
all
that's
this
the positive
evidence
takeaway
because
here.
that's what they've been looking
All right,
for,
thanks to Caroline
and you end
Wood,
up
senior
believing
markets
them.
correspondent here on the network,
Only to
breaking
find
down
out
the
this guy's
story
actually
on
blue.
Boeing
You'd be
and
upset
Spirit
with the sky.
AeroSystems. But now let's bring in Joe Mazzola, Director of Trading and
your
Education
fault.
at Charles Schwab. Joe, what's your takeaway here from the earnings results? Because
Own up.
you
Have
know,
some
if the
responsibility
banks
for your
were holding
actions.
up this stock market, I think we'd be down a little bit more at this point.
Oh, excuse me.
Well,
on the positive sector.
I might
right
might
now
cut
in terms
this.
of
Let's see.
financials. I mean, you got some pretty substantial blowout earnings from JP Morgan, Citigroup, positive guidance.
Yeah, JP Morgan's ripping.
Even the reserve requirements where they had to add
Excuse me.
I don't think we're substantial enough to scare the market. And you can see the follow through on those names. It's not these names that are leading the market down. It's surprising to a certain extent because
Oh,
I
a little
think
pop. Let's see.
so much had been built up, you know, leading into today, right? This was the big Friday that you get the banks, and
I'm for
are we going to
breakfast.
see stress in the big banks? And I think, at least from my perspective, that, you know, the big banks were going to be solid. I mean, you know, they traditionally beat on earnings, especially, you know, JP Morgan. That's something that you tend to see. So it's not the big banks, you know, that I think we had to worry about. That'll come later when we see some more of the smaller to the regional banks. But I mean, look, you had JP Morgan profits up 52% year over year, revenue up 25%. They beat handily on earnings per share. You saw the same thing as I mentioned in Citigroup. You know, they surpassed analyst estimates.
Sorry,
as
I'm
well.
watching CXAI just because I'm.
You know, Wells
trade
Fargo
this
was
one
good,
right now, so
and they're
I'll watch it
they're
kinda
holding
close.
steady as well too.
I want to set a stop loss
Income
because I don't
is the
get
big
triggered.
driver of a lot of these results. And what you're seeing right now is that is getting booked in this
It
Q1.
does suck.
I
If
think,
that's the case, Dean. That's what's happening.
My biggest takeaway coming out of this, you know, was the guidance
I
going
wouldn't
forward.
always expect them to.
And,
I mean,
you know, you saw these companies
kind of-
raise guidance as well too. So at least for the big banks,
kind
they're
of conflicting
showing
forces
their quality
away.
leading into the rest of the year.
Yeah, definitely that net interest income, it just exploded for JP Morgan. And the estimates were actually pretty elevated for those numbers, but they still blew out those, those estimates that had been revised higher at this point. But Kev, if you look at some of the data points, you mentioned the retail sales. We've got some of the retailers down, Walmart, Costco, and some others based on that. This is the worst report since June of 2020 for retail sales. Is this signaling that we're going to see continued weakness out of the consumer, because the consumer's been there to kind of backstop this economy at this point?
Yeah, the question really is, what's the trend there, right? Is this, you know, if you look at the overall data,
I'm zoomed in. It's not quite a double bottom.
Most of it is getting weaker, Tom. The consumer sentiment number wasn't weaker. That was higher. The non-farm payroll number was better than expected. But a lot of this forward-looking or data, I shouldn't say forward-looking, the retail sales data, you know, we're getting a good swath of economic data that is weaker than expected. And Tom, one thing, just to put some context into what Joe was saying, those provisions for credit losses at JP Morgan, $2.275 billion. Wells Fargo, $1.2 billion. Citigroup, only $241 million. in terms of new provisions for credit
GFAI
losses.
came down a little
guys,
bit.
I think, you know, you can make a case that now 2/3, 3/4 of the economic data we're getting is showing softening. Some still isn't, but jobless claims have. You saw retail sales.
GME down 0.5%.
The numbers are starting
That gas
to turn
holding
to the
out at the
downside
highs here, up 3
The
1/4.
question is, what does that mean for the market yields,
Need
the
another
U.S. dollar?
5%
There's
on
a
it.
lot going on here, guys.
But happy
and
that it's over
now,
$2.
You know, the macroeconomic data has to share the stage with the micro data from earnings. So yeah, there's a lot to consume and digest here with this market, guys.
Yeah, and
Hey, Tom.
yeah, go ahead, Joe.
Real quick, just to add to Kevin's point there, that UMISH consumer sentiment.
Yeah.
One thing that really
that
stuck
too
out to
early?
me was that 1-year inflation gauge.
Right.
When that number came out, the market really started to turn because that is something that the
I
Fed
was
is
early,
watching is
dang.
consumer expectations for inflation. That
I
surged
can't get back in. I'm in a day trade.
4.6% from
Oh, well.
3.6% where it was before. So what does that mean? That means that consumers are expecting higher for longer on the price scale, and that,
Yeah, 0 day
you know,
trades.
when you combine
CXAI
that
has
with what we
warrants?
saw with retail sales, that portends a very, very cautious consumer heading into the rest of the year.
Yes.
Yeah, that's
Has
the
warrants.
highest level since November on that preliminary U.S. consumer report out of that one college up north in Michigan that releases that,
Right,
Joe.
isn't that what this is?
But, you know, I think that's a good point to bring up here, Joe, is that if you look at the headline number on that, you know, it's still rising and it's still doing well, and it still kind of reflects that the consumer is still comfortable with this economy, but
Warrants trade in
maybe they're
extended
still
hours.
paying for, you know,
That's
dining
something
out
interesting to
and
think about.
services, travel, but you know, if you look at some of the staples that are down today, it's kind of reflective of that. Is that the key point that investors should be watching moving forward? Because the estimates
Was the
for
warrants move
GDP going
larger?
into the end of the year, they're not really signaling a recession at this point.
1,100%. Yes, it was
We're
larger.
not signaling recession at this point, and some of the speak that we heard from some of the bank CEOs, you know, whether a light recession, no recession. You heard it from the Fed earlier in the week in the minutes where they talked about a potential for a light recession. I think, you know, what we've been talking about is this idea of a
It's
rolling
interesting. The
recession,
intraday
right?
move
An
was
idea
smaller
of
on the
it can
warrants.
roll from sector to sector. And
But
that's
the
actually
after hours
probably
move,
a
this is
pretty
maybe
good
what
thing.
fueled the
And
stock
let me-
ripping
let-
up so
let me
much
state
for
why
these
that is.
warrants.
If you can reduce the exposure from sector to sector and reduce that pain from sector to sector, as opposed to all hitting at once, that means that there can be some outperformance. There can be jobs created in different sectors, and we're starting to see that. I mean, you know, the recession in housing.
There's
was
the
really
bounce I was
last
looking
year.
for.
We're starting to see some bottoming, and you're starting to see some buyers go
Oh,
back here in
well.
the spring. Where's it going to be next? You know, technology. You saw that with all the layoffs.
If I bought it now, I'd
that
have to hold
occurred in
it.
December,
Hold it over
January,
the weekend.
continue now. You know, it is, as long as it continues to roll, it's not going to take a huge chunk
Highs
out of the
moving down
economy.
here.
Now, where we need to be concerned is whether or not credit stiffens so much or tightens so much
Signature
that
bank.
that really
Yeah.
kind of slows down not only supply of credit, but demand of credit. And I think that's just as important. We talk about whether or not banks are willing to supply that credit. If there's no demand for credit, if people look at the rates and say, nah, I'm going to wait because I think, you know, I can get a better rate later, that pushes back that whole economic cycle, and that could
Looks like
pull
it's still there.
forward that recession.
Yeah, and I think you know, that's one of the things that Jamie Dimon said on some of his commentary about that. He doesn't see you know, a credit crunch in here, and he said there's a few bad players out there in the banks, but overall the system is pretty healthy, and I think the results are kind of reflective of that. And maybe that's the soft landing that the Fed's aiming for at this point. If we do get a little bit of a pullback in consumer spending a little bit, maybe that
Literally
will
cut
do
out
a
right
lot
when
of the
things started
Fed's
going.
work for it. All right, guys, let's take a
Dang,
quick
dog.
break. But when we come back, we're going to launch into the
We
fintech
stuck our
sector.
game.
We're going to take a look at PayPal, which has definitely been underperforming the overall market so far this year. Fast Markets coming right back.
I don't know. SI might not do anything. I mean, earnings is on Tuesday. So, the pattern in the past days, we're gonna have daily patterns on it. I don't know. I like it above $1.50. I think that's pretty solid support it's shown, so if it gets there, I'd buy more. And I mean, maybe a pop. 168, a pretty heavily resisted line. On the hourly now, it is bearish on the MACD, right under the 9, so seems like it's coming down before it goes up at least. If we look at some, that retraced that level, whatever percent that is, I can't remember. This hasn't retraced there yet. So there, that'd be, if it's doing the same retracement, that'd be 150.19, so close to that 150 level. Buy moving down. Gas trying to pump up here a little bit. The weak bounce on CXAI anyways. Press holding up 28%. My size 28. SMX still up 25. Yep, 5. Tesla short is slowly making money. 6 of them. "78% of Americans do not feel confident." Read that one. China's Ant Group signed strategic cooperation agreement with Chongqing city government. Meta platforms new features on Instagram Reels, trends, editing, and GIFs. Offices were the worst performing U.S. commercial properties in 2022. City CEO Jane Fraser says the U.S. will enter in a shallow recession, like kiddie pool depths. SMX back below that support level. See if it respects VWAP. Regional and local banks are big lenders to retail and offices. Not good. City CEO says the U.S. will enter into a shallow recession. Starbucks CEO wants senior leaders to work in stores. French pension reform. Constitutional Council clears raise of retirement age to 64. Numerous congressional members are once again being seen as trading during crisis, specifically the banking crisis. Nicole Maliotakis buying NYCB up 40% after the bank taking signatures deposits. She reported this TXN as her spouse's, yet she is unmarried. Oh, transaction. TXN is transaction. And she's unmarried. That's pretty funny. I mean, it's clever. Not clever enough. We got you. Nothing we're gonna do about it. Bed Bath down 8.23. Apple sent a survey to corporate employees at 7 a.m. this week asking for their views about hybrid work after threatening to discipline anyone not coming to the office at least 3 days a week. Threatening to discipline? Sounds like a daycare. Kindergarten. BFM TV reports President Macron will sign into law reform bill within the next 48 hours. Brazil's President Luiz Inácio Lula da Silva has said, who was it that decided that the US dollar was a currency after the disappearance of the gold standard? Shots fired. Spy bouncing bid here.
lot of that was
Looks like
driven by
NatGas
that
potentially had a
Braintree
false break
transaction
up the
growth.
downside.
PayPal even
Spring
said
test,
that Braintree's
dip before the
responsible for
rip.
about 5% of its year-over-year transaction revenue growth. You know, that free cash flow number that you said really stuck out to me. But here's the other thing.
Made another
What
RSI
you need to kind of
divergence
think
actually there on
about if
UNG.
you're looking at PayPal is how much of that slowdown that Kevin mentioned, that compound average growth rate, how much
Nice
of
and
that
cool from Ken on the
slowdown
daily
was
if that
priced
closes.
into 2022? Because we're 75%
The liquidity
off
down
our
to
2021
407.
highs. So, you know, looking forward, is that something that, you know, provides a little bit
I might be setting up a
of
little
a
head and
runway
shoulders here.
for this name if it can just continue to maybe shift the focus away from
Almost an RSI divergence also.
the average user base, and maybe pay a little bit more attention
Close.
to keeping costs in line, keeping expenses in line, and focusing a little bit more on the business segment.
Yeah, definitely. And you got an example trade. They've got earnings next month, Joe. How do you want to look at this from an example trade perspective?
Well, the first thing I looked at, you know, because the stock has really been range bound for a while now, is I looked at the implied volatility. Tom, you want to look at that from in terms of a percentile? You're about the 6% in terms of implied volatility. I mean, there's just not much there. The options aren't looking very rich relative to where they've been in the last year. So a lot of that has to do with the fact that the stock has just kind of been trading and treading water, trading sideways for a while. So when I see implied volatility get that low, it's really difficult to sell options and use that as a way to generate a decent amount of income. So I looked at it the other way and said, hey, how can I own some of this premium heading into that earnings announcement? So what I did is I looked at a long call calendar, or diagonal is a better way to put it. I looked to buy the May 12th 75 calls and sell the May 5th 80 calls. It's basically you have a calendar and a vertical spread kind of built into one. It puts your break even, as you can see here, around 77.50. That's if you can get it done between that 350 to 360 level right now. And the reason I chose that 80 level as the sell is it does a couple things. Number one, it lowers the cost of you buying that May 12 option. And by the way, if earnings are set to release on May 8th, you actually own that earnings premium. But it lowers the cost of that call that you're buying, that 75 strike call, by about 23%. So it's taking some of that initial debit out. It's taking some of that risk out. It gives you the ability to kind of maximize the gains up until that 80 level. And you can always roll this, right? If the stock gets above a pretty important resistance level that we're at right now, there's a kind of a confluence of the 50 and the 100-day really trading right here, right about 76. If you can get above, if the stock can get above that level, there's the potential for this thing to maybe revisit some of those levels that we saw in early March, or
probably
even all the way back to February, was trading around that $80 level. If that's the case, this
yeah, that's true. Little head and shoulders there.
Can start to maximize gains as you get above.
Yeah, your bearish might be better than the 9.
Fail at this level, well, then the debit that you
be a nice short here.
350 or 355, wherever you get it done at, that is going to be the max risk.
Yeah, let's break this example trade down. Going out to the May 12th weekly series. It's 28 days till expiration. Buying the 75 strike call, slightly in the money. And then against that, selling the May 5th weeklies. That'll capture that earnings event. Selling the 80 strike call there.
This isn't
$5
like
wide call diagonal. Paying $350 debit. There's
options
your
are
risk,
nice and liquid at least.
$350 per spread. Joe mentioned that break even of 77.50. At or near that level as you get into expiration. You'll have some assignment risk on that short call. But a good look at this, Kev. Your take here on the call diagonal. You're paying $350 on a $5 wide. So that's a bonus part of it where you don't have any risk to the upside above that break even.
I haven't. There's been no chat on Discord since my last gift.
Joe's fit that in nicely because
I'm actually still hungry. I need to eat some more.
So there's
You're lucky I'm not being
in that
interrupted
to
for my
really
food.
bring the price of that
May
on 12th call down. And so, yeah, this is a spread.
Thank you, Ace. Appreciate it, man. CJ Lee, Ask Why, Eli, Bipolar, Daisy Chain. You've all been summoned to chat. To thank Papa Ace, aka BBBY Fire Marshal Bill.
Chart on this. It's not one that needs you to go
Dunkirk right now for sure. Yep. Bipolar's been around for a while.
75 and then 80 and then higher. You know that spread goes to $5 and you're profitable. So
Ace is the place for sure.
That takes advantage, a more passive, it's only 30 deltas, so it's not a big delta spread.
Check
the risk is
whoa.
marginal at $3.5, but this is one that takes advantage.
Oh, too late, Jim. You missed it.
The calendar spread family, the low implied.
I'm gonna look at some of the video puts.
And the embedded vertical spread.
Ace, are you gonna open up a short position on BBY?
You have that ability to roll that short 80 strike call as you get closer to expiration. If the market's open, liquidity is provided on that, and that'll give you some credits also. But the idea here is the stock grinds up towards that 80 level. Joe mentioned maybe some resistance there if it gets back up there, which is where you want this to go, but anything above that break-even profitable. All right, great look at that example trade there in PayPal for us. And thanks to Joe Mazzola. He's the Director of Trading and Education at Charles Schwab for joining us, helping us break down markets and PayPal. But coming up after the break, Kevin and I are going to be joined by Megan Brantley from Likefolio for a discussion on Block, which continues to struggle this year, and despite gains for the overall market. Fast Market's coming right back.
All right, I did it. Good call in the video. I'm liking it, especially with the market top going on. All the big mega caps are looking bearish. Did a really safe spread. Probability of max profits like 50%. So, I like it. It is NVIDIA May 260, 265 put debit spread. I got two of them actually, so kind of big, but that's because it's safe. Safe-ish, safer. Yeah, I thought we already hit a bottom on BBY. Did we get lower? Yeah, I thought this was the bottom, kind of bounced up, came back down, but yeah, I think this is still kind of the bottom. Just haven't really rallied yet. Short shares available. Let's check. iBorrow is saying. iBorrow is saying quite a bit of shares. The borrow fee's been dropping also. These are not good signs. But we're not really looking for this kind of stuff necessarily for it to move. We're looking for a news catalyst. I think that's pretty much it on Bed Bath. But yeah, as you see, these bars are the shares. So the shares available have increased since last month, and the borrow fee simultaneously has decreased significantly since last month. This also probably is from all the dilution that's gone down. They like 4x the outstanding shares for the float. So that would definitely cause this as well. Since there's more supply, there's just less demand, right? So it decreases demand, all that supply. Yeah, shares outstanding is now 466 million. Free float's 465, yeah. So they've close to 4x the float, which would naturally cause that. That gas still going up. SMX flirting with that $3 again. Quit. SPY new low of the day there. Down the risky place, go safer for now. Yeah, safe, get some momentum, base hits. Safe entry for the day. Right, yeah. Holding over weekends to me is never, unless you're expecting news and a big gap down from here on Bed Bath. You know, you could always get news and gap up. You news comes out on the weekends often. So that's why I got calls. Really just for the weekend news potential. SMX 3015, 301 or 305, up 35%. That's why I'm glad I didn't close, because it's like we're never free bought, but if I went back in up here, similar to how I did back here. However, that exit kind of made sense with TA. But I mean, look how beautiful this chart is. It's like basically BBY inverse. It's going up for one. It started mellow and then it's starting to speed up. BBY started fast and started slowing down. It's downtrend. It started the uptrend slow and now it's gaining acceleration. Accelerating. You're still looking for a play because SMX is up a lot. I think it's keep going, but waiting for a pullback on that would probably be smart. I think GTII is still. I still like this one. It's just gonna take. Well, I can take at least a few days, maybe a week, but if this pattern continues to repeat.
Research, but the fundamentals of this company seem to be
this guy's already home.
Deteriorating, Megan.
Go home early on Friday.
Yeah, and what's interesting, I'm glad you brought those things up because things like operational expenses are not likely to show up in our data. But what we can pay attention to is demand and sentiment.
GME moving up a little bit here.
So
never made it to that kind of downtrend we have drawn.
Investing in building
Bounce on the
its
support
products,
from
expanding
yesterday.
its products, improving its products. That you would see some
2241
type of
area.
improvement in those overall consumer
Just
happiness
really
level,
consolidating
right?
at these
Maybe the
levels.
end user has a better experience, but we're not seeing that. Whenever we look at the overall happiness levels of Block,
Just good.
those are sitting around 66% positive. And just to give a frame of reference, when you looked at this company 2 years ago, 3 years ago, that was up close to 80. So that's a really big drop in overall sentiment levels. And this previously was, whenever we looked at our data, this was Block's edge. You know, consumers really liked its product. They offered a superior experience, and that's why a lot of people kept using their product. And now we're starting to see some underperformance versus peers when we look at things in the e-commerce space, when we look at things in the peer-to-peer payment space, even when we look at things in the crypto space, which is an area that, you know, Block really locked itself into. So I think that that's a little bit concerning long-term whenever we see a drop in sentiment over 10 points.
Not really
That's pretty significant in our
147.
universe. And also a drop in sentiment at a time when we're seeing demand slowing down. So what that's telling us is that we're seeing, you know, a smaller group of these really loyal, really excited consumers that are less happy. So again, just another red flag in our data whenever we see a drop in sentiment, underperforming peers at the same time that we see a decline in consumer demand.
Yeah, you know, they don't have earnings for a few weeks here, Megan, but I noticed the direct deposit mentions, and that's about 40 to 50% of their profitability for this company. Is that maybe one of the bright spots for this company that could be, you know, maybe the next innovator that can expand their business?
Yeah, you know, I wish that could be the bright spot in this
Some
conversation.
of those people just might be employed.
Unfortunately for us, when we look at this, we actually see direct deposit mentions down. And what's interesting is you can see a lot of these mentions are tied to, you know, they really spike in times of government stimulus. A lot of people opted to have those directly deposited, and it also spikes alongside tax returns. And so this is a really important time for us to kind of look and see, you know, on the consumer front, how's the consumer doing? And we see those down pretty significantly year over year. We also know that I think on average tax returns are supposed to be about 11% lower for consumers consumers this year versus last year. And so in the first quarter, that should be a time when we see an increase in consumer demand for Cash App and for Block, because we see an influx of consumers who are, getting that deposit and then also increase their spending. So for us, this is a sign that maybe these consumers, or these Block consumers, and where our data lands, these Cash App consumers specifically, have a little less spending power. They're feeling a little bit more of those macro pressures and the lagging impacts of inflation. So we have some macro headwinds mounting too.
And, as I mentioned, they don't have earnings for a few weeks. Do you guys have an earnings score on this? Are you still seeing weak numbers according to your data?
Yeah, so our earnings score right now is a -47, which in our world, that's pretty bearish. To give frame of reference, I know you guys talked PayPal in the last block, and our score is pretty neutral there. So a little bit of a divergence in what's often compared, a peer that's often compared to them to have, Block pretty bearish at -47 versus a pretty neutral PayPal.
All right, negative numbers here for Block. See if that anything comes out of that Hindenburg Research short report also. All right, Megan, thank you very much. Have a great weekend.
Thanks, guys. You too.
All right, Megan Brantley, the Vice President of Research at Likefolio, breaking down the data for us. Kev, one of the first things I look at when I look at Block/Square is the comparison chart with Bitcoin. And it's really starting to diverge. I mean, we've seen Bitcoin go up to 10-month highs in today's session before falling back a little bit, but now we're seeing them widen out. PayPal's only up 2%. How do you want to look at this from an example trade?
Yeah, that's more bad news for Block, right? They sold off with Bitcoin, and now Bitcoin's rallying up, and they're not following along with. That's more concerning news for them. Tom, all the data, and our client, our people watching, our viewers can go look at the Hindenburg research on Block. It's harsh, Tom, and we don't want to get into that here, but overall, the expenses, the cash flow going down is what really caught my eye, Tom. So what I did, they have earnings on the 4th of May. So I went out past that to the May 12th, and then I did next week. So I've got time on my hands. I've got time to extend duration on this, including into the earnings event, Tom. So I'm past the earnings event, and then I'm before it with the chance to roll into the earnings event, Tom. So what I did the May 12th and then the April 21st 60-put calendar spread. It's
$3.40 it hit there. Big red candle.
Right now, it was a little higher than that. So
seems really liquid though.
It's like I said, you're targeting $60, which is about $4 lower than it is right now. The debit is $2.40. That's the risk on this.
Scaling out tree. Well done, sir.
And then I'm looking for a slow move down with the opportunity over the next couple of weeks to extend duration, including into that, and what this trade will hopefully.
Yeah, not sure I'm going to hold much over the weekend on this.
If it doesn't go at any time, obviously, if it goes towards 60, you can close the trade. But you're looking for that long the May 12th and then short the earnings event there, Tom. So that's what I'm hoping each time, chipping away at that net debit.
Yeah, let's break this down. Buying
this is what happens when it's so liquid.
Weekly 60 strike put, that's 28 days till expiration. And then against it, to reduce some costs on that, you sell the April 21st monthly options on that 60 strike.
Just my order,
put.
remember
Paying
yesterday,
about a
caused a drop to
$2.35 debit on that. You can see the risk
this starts
profile.
going, and people start.
It's got break evens
about
about 57 on the downside,
spreads.
about 64 on the
stop
upside.
losses
So you got a nice wide range. But Kevin, when you look at the profitability on this, it doesn't look that great
like
because of the fact that you kind of, this one overlooks the fact that when you roll or adjust this position into that earnings weekly cycle on the May 5th weekly cycle, as long as the market's open, liquidity is provided, you can do rolls. That'll give you that nice pop because implied volatility will be elevated, right?
Remember, this is a 3-week calendar spread.
Yeah.
A lot of times on this show, we do 1-weekers. This is a 3-week that takes you past earnings. And think about the roll you're going to be able to do if this trade is at or near or even where it is now. You'll be able to really reduce the overall net debit on this trade, Tom. You can roll to the April 28th and then right into that earnings event, Tom. So you've got a chance to
I'm just saying, this thing's a liquid.
lower the net
It's going to
debit.
happen.
And then when you do that, you lower the break even on this trade.
Right. Yeah. And the debit that you
and I'll
pay
start
on
with you,
this,
Tree. You started that.
debit, it's going to be your risk, $235 per spread. You do have some assignment risk on that short option into expiration over the next 7 days also. But a good look at, kind of setting up with what Folio's data is predicting at this point, where they're still a little bit weak on this. This is about $4 below
That cat's
the current
ripping,
share
5.25.
price.
I'm still in, I haven't sold anything.
Block, so expecting maybe a grind lower here over the next 28 days. All right, good look at that example trade there in block. But coming up after the break, Kevin and I are going to take a look at McDonald's, which hit another all-time high today. People can't get enough of the McDonald's. Fast Market's coming right back.
You mean the rest of your position? You haven't sold all your position yet? I think you should be fine. It'll tell you though when you put the order up. It'll tell you if you can't do that or whatever. Right as I said, I don't think I'm going to hold it over the weekend. It did that. Ugh. Well, I might be holding over the weekend now. Buys moving down here. New low on the day. Stop losses for kids, man. I should have a stop loss actually. To get triggered on that prop. 5, kind of flushing. Ooh. Red 2.5%, dude. This thing's crazy. Going down much quicker than it went up. Wow. Wow, wow, wow. Holy crap. Yeah, that's the problem with the liquid stocks, I'd say. Just hardly any trading, and it just moves it so fast. Free float's 20 million. Get a little bit of volume here, it just pushes it. Well, if you wanted to dip buy, here's your chance. Flushing down here. New lows down 0.8%. Net gas 4.24. The dollar resistance I see, I mean, got a ways to go. Like 105.83. But yeah, dollar's definitely rallying. SMX is now red. Yes, that's hilarious. I still like it on the longer time frames. Big profit taking there though for sure. We wouldn't want to hold out for that next resistance. Where do we stop out at? B4. kind of a level. Not really. People tried to front run it. Just snowballed. I would add more, but I added a good amount yesterday. Pretty content with my size. But that is the risk with thinly traded stocks. That was it, 40%? 42%. Is it like 10 minutes? Bar chart gives you a resistance of 101.88. Remember, look for resistance levels on bar chart. And Bitcoin, just sell all. We were just talking about scaling, Tree. But yeah, if you didn't have a plan on exiting, then you were destined just to sell on emotion. So scaling is, you know, if you're planning on holding it until a certain price or a certain amount of time, then you can scale. If you're just gonna sell once it, you know, whenever, arbitrarily, then scaling doesn't make any sense. What's a 415? The big flush card. I know, yeah, it rejected quickly. Yeah, SPY's rejection was fast. Definitely blow off the top type characteristics because it ripped up there fast too. Got filled today. Yeah, just depend on your plan. If you planned on day trading scalping it, then that was a great time to sell. It was a little double top. Whatever, start to get a red candle, sell it. It's just, what's your plan? You gonna buy back in now? If you're willing to sell there, but you still want the move to 407, then you should probably be buying back in down here.
Starting to expand, maybe some of their input costs. Eggs are down. We're down nearly 11% last month, so maybe that's going to help their margins there also. All right, thanks to George Tillis, senior markets correspondent here, breaking down McDonald's for us. Kev, wanted to go to you. You know, PEG ratio is getting expanded on this name. Valuations getting towards the higher end of the past 5 years. So historical valuations. You know, this is getting elevated on those valuations, but as George mentioned,
new all-time low on Bed Bath & Beyond, guys. Congratulations.
Yeah, you're right. There's
down almost 9%.
To be excited about
2.7, and it's flushing.
Not only are their market
calls
share
any cheaper?
rising,
No,
their
calls are still the
profit
same price.
margins are beating their competitors.
They're getting to the level
What
where
do
they're not
mean
going to
by
get.
that?
I mean, they are going to
Think
get cheaper,
about this,
but
Tom.
it takes a lot to move the price on them.
Over
once they're just a couple pennies.
40% profit margins on their on what they sell. Chipotle has a 12% profit margin, Tom. That's McDonald's beating them by more than 3 times. So
yeah, GME,
their low price point,
GME gaps the downside fill like 90% of the time, and upside are like
potential recession
50 or less than half, maybe.
But this company continues
there
to
was
fire
someone
on
super
all
strong
cylinders. You see it in the
pulled all the
metrics,
historical
you
data.
see it in the price of the stock, Tom. Yeah, you're right. It's getting overbought. It's had an incredible record run here. But boy, if you look at the numbers justify some of the movement. All of it, I have no idea, Tom.
Yeah.
That we don't get to choose. But boys, they have good news. They're not void of good news, Tom.
Yeah, and the strategy I came up with, Kev, a lot of people look at this and go, oh, hey, how would I, maybe take the opportunity at all times?
Yeah, here's your bounce buy if you want to
consolidate or at least pull back just a little bit.
Yesterday's levels
coming up here in a couple weeks. So I looked at a strategy that fits into that
probably
narrative.
wait and get it
if you
back
think
down
it's going to
here
go down, but you don't need it to go down like 10% or 5% even. So I looked at an unbalanced put butterfly here, Kev, where I'm going out to the May 5th weekly series here. So you've got 21 days till expiration on that. They've got earnings on the 25th of April, so you have that catalyst.
We'll cool off on our side.
Buying the 290 strike put, slightly in the money. Selling 2 of the 280 strike put, and then buying 1 of the 275 strike put. You're paying roughly, we've got 235 debit on here. It might be closer to 260 because the stock has pulled back here a little bit. So you might have to pay a little bit more. But for our reference here on the risk profile, if you pay a 235 debit, that's going to be your risk on this trade, $235 per spread with a break even, about 287.65 to the downside. Now, it apexes out, Kevin, at 280, but you're still profitable even below that 275 strike because you made this unbalanced
run up next week, actually.
Your thoughts here, Kev, on the unbalanced put butterfly?
Get out of this short.
Maybe a little bit of a grind lower.
Yeah, no matter how good the news is in McDonald's, no matter how good we say the metrics are, you know what it can't hide from? A global sell-off, which is what you're getting here today. And
yeah, this is a pretty big
sell-off. Will be part of that global sell-off.
That gas is thankfully rallying, so
if
be able to trade some. Thing is with the amount of margin,
this is a spread. Now it's not cheap.
If that gas is moving, like
about
making pretty big intraday moves, you can make a lot more on that
because the stock has moved down
than
lower.
you can on like ES.
You're buying an in-the-money put, selling.
Yes, you're trading a lot more notional value, but percentage moves are so much smaller.
Lower than that. You're short
like
the
nat gas today with the amount of margin I could get gotten on ES.
So you'll
nat gas contracts up $1,000
of that profit, but
ES
still,
would be
you're
if I timed it like perfect,
how low it goes. But this
which
is
I
a
wouldn't.
It'd
be
it's got about
$600, $700.
Delta's time. You are collecting theoretical theta here, though. So since it's moved in between those strikes, you are collecting theta on this butterfly. But yeah, no downside risk on this trade, Tom.
Hey, Julian.
Below that break
great.
even 287.65 and even below that 275, it would be nearly a double because you're buying a $10 wide put vertical, helping finance.
We'll see if I hold these in the weekend, but yeah.
Short put vertical that creates this
might be in
unbalanced
1500 for the weekend.
But a good look at an example trade that takes advantage
drop
of
there wiped out.
A slight grind lower.
1500.
All right, that's going to do it for Kevin and I.
Dollars though, which
kind
of sucked.
Fast Market, but stick around right here on the TD Ameritrade Network. Next Gen Investing is up next.
Lost faith in BBBY. That means it's the best time to buy it. Once faith is being lost, you're in the despair phase. Massive warrants which were exercised. Yeah, a lot of dilution. Our free float basically 4x'd. SMX. I mean, you saw how volatile it goes to the downside. That's why I maybe wouldn't do a stop loss. But if you do want to do a stop loss, probably pick a support or resistance, or depends on your risk tolerance. Probably $2, somewhere under $2. 195, 197. That's a pretty big range from where we are now, I guess. But again, this just stop loss hunted like crazy, starting just by a few cells, starting by freaking Tree with his sell. He started this. We all wanted to buy, and Tree had to come in and say, "I'm gonna sell." It's not micro, it's small. It's 20 million. I don't know, is that considered micro? No, I'm kidding, you're fine, dude. Yeah, this was a 40% drop it just did. Definitely moves fast. 40% from that high to low, in like 10 minutes. If you zoom out, you can see that it's still a great trend. Like, today is a pretty big range in profit taking, but not still an uptrend. There's still no. They can still bring up more news about them fighting counterfeit trading on their stock, which would be a catalyst for it to rip. I didn't buy more BY, no. I bought those calls a little earlier. Investing. Yeah, I mean, I'd maybe wait a little bit on SMX, as it does look like it's kind of bear flagging, so you could maybe see more levels down before it continues its uptrend. You put the farm in the video for the weekend? To the upside? $2? $2 is 7%, roughly 7.5%. But I mean, it's swinging that right now. It hit $2.01. So it's down 7-8% and then just ripped up plus 4%. So this thing is sketchy. I think that gap fill is still coming. We just have profit taking. It's Friday. This thing has gone up hundreds of percent this last week. So that's why I was saying just before it dropped later, that guy should probably close this out before the weekend. Yeah, it's gone up 200% just this week. So you come into Friday, people are gonna take profits. That 161 level actually might be the support if the $2 breaks. I'm bouncing up here. CXAI. Continued the uptrend from where I bought and sold. Was that here? No, it was here. So it would have been a good hold after all. 15%, not bad. Still in GFAI. Could still move, I think. Surprised oil's holding up so well with the market. Oil needs to come down. Getty's up 6%. It's been on a nice little trend. Yeah, I'd say it's around the bottom on the day on SMX. Started with this engulfing candle here with volume. This is what I was hoping we were gonna see after BBY. Downtrend, engulfing candle with volume. Volume there because of that. Oh, volume was the next day. Oh, that's still more volume. It rallied. Maybe set up a little cup and handle. So slow on this platform too. Even try and get out when it was dumping like that. Yeah, it's just so slow. Buy bouncing here. Looks like it's found a bottom for the day. 1 o'clock. Temporary bottom. $23.27 on Bed Bath. But on your other account? Getty up 6.3. SI still at 155. BTI still at up 4 1/4. It's Friday. People equals target. PTPI keep going. Consolidating here, nice. Above VWAP. This is why I was looking for a double bottom in CXAI. Oh, jeez. Just ripped up to VWAP. I was hoping for a VWAP move and maybe a big move. Eh. Had the right idea, it didn't hold out long enough. What we saw the other day with it was above VWAP, I guess, but was it this one? Yeah, it's above VWAP though. Did that double bottom. A huge move up on the day, like, oh, it's over. It's up 500%. Or whatever, 300%. Double bottomed and then went up to the rest, to the 500. Today it's below VWAP, so that's a little different. But even the move from here to here is like 20% or whatever. And this thing might explode out. Back up. Let's get nuts. GFAI looks like it might. Ooh. An RXP, yeah. This one might have the PDUFA catalyst at the end of the month too. Careful. Could go up 1,000%, could drop 500%. You just move on a catalyst though. GFAI flirting with that VWAP. Oh my gosh. I could get back in, but I couldn't get out today. Guess I could on another account. Or it might even be a good short here. Can't short on that account. Bouncing on the off the bottom. It basically just did what it did in pre-market. It's not as high. That's why that was a resistance. People were running it up to pre-market's high and it just got front ran a little bit. Wasn't even thinking about the pre-market. I should have had that line in there. I probably would have had it at least up here though. That's true. My mistake. This one showed an RSI divergence on the 5-minute too. It was hard on the 5. I mean, it happened so fast. Why still rallying up? Yeah, 9's chart I think looked good the other day. GFAI rejecting VWAP. I just wasn't sure oil was gonna keep going up. This doesn't look good anymore. Order flow glitch.
They do anticipate now about 2.1 million subscriber additions in first quarter and about 2.5 million in their second quarter. The investment firm does believe the recent price cuts though in more than 30 countries could attract some of these, say, lower priced consumers that are looking to get into streaming while it being more affordable. So I would say this note was not
I would say this is the bottom on Bed Bath for today.
Have a neutral rating on Netflix with a
does have an RSI
300
divergence. Kind of a double bottom here too.
Some of these impacts from some of the decisions from the company leadership are actually going to have. We know they have introduced ads. They've worked to crack down on password sharing. They're introducing some different pricing points and different models and different things that you can do with that. We're going to see how this all shapes up, but we're going to get earnings next week. Might even pick up shares hold over the weekend. Notoriously one of the most volatile names in response to surprises on earnings. Buckle up. I'm excited for this one. It's been on an upswing lately. We'll see if it can continue. Still only about halfway to its all-time high. Just to put in perspective just how crazy the moves were last year in Netflix. Gonna say upvote though, we'll love to talk about it.
Yeah, and now that we have some of the major banks in the rearview mirror, we have to look forward to some of these highly volatile names, those being Tesla as well as Netflix. So we'll be looking at some example trades as well as some charts with our chart master, Ben Lichtenstein.
Lichtenstein.
We'll be right back.
Might sell them after hours today or maybe on a pre-market pump on Monday. But hopefully I just hold them because we've got crazy bullish news over the weekend. Bull shows 0 for the last 5 days. Oh, probably just Weeble. Hey, pretty mama. I'm not going to be selling these shares today. Oh, that's true. I can't sell them after hours today. It'll have to be on Monday. That's me. Yeah, you might get some gap ups Monday morning on some AI stocks. GFAI might be one of them. Yeah, this thing's still just coming down to the moving average here, this 9. So, kind of hard to see what's going on with it. So choppy. If you look at extended hours though, it's easier to see. It's this trend up it's in. So this might be a good dip buy, really. GFAI at VWAP. Couple more fills for me. Not getting as big of a position as I got the other day when we had that engulfing candle. Much smaller, like half the size, or a quarter even. Yeah, it's like a quarter of the size. I get more, but I don't have any capital. I could sell my Tesla short, which I maybe should do. Yeah, I'm gonna close out of this thing. I should have closed Tesla on the bottom of that SPY. I don't know what I was thinking. Yeah. So I saw the SPY bottom. That was Tesla's bottom too, of course. Jeez, look at that thing go. Okay. Because this might have a pre-earnings rally, even though the chart's bearish. short's fine to hold, but I don't want to tie up that much capital if it goes negative on me. So I took a little profit on the Tesla. Silver get kind of bouncing there. Alright, find a bottom. The H rally. What's PH? Nice looking bull flag on the hourly. Oh, there's another AI one. Of course, MRAI. Power hour. I don't know, we've still got like almost 2 hours to power hour. But yeah, it does look like it did find a bottom. MACD's now bullish. Green over the 9th, breaking out of this level. So interesting. I'm out of day trades on here, so I'm not gonna mess with it. CXAI. Even had the right entry too. I just walked away. Is this thing over VWAP? I mean, it could be back up to 20. It could start retracing all those crazy gains from pre-market. Don't think I want to hold this over the weekend. I bought in now. Jeez. Even that moves 30%. Time removes this the rules. I don't know which one this would have broken. I guess patience, but it was cutting losses. Like I said, when I entered it, I said if it broke here, I'm gonna cut it. And sticking to my rules. I guess it didn't quite break it. It wasn't here though. It was here. Candle was that on? It's here that I got in. Then this candle, it broke it. But that's kind of a bullish candle. I can't remember which one of these candles I got in on. Yeah. I mean, it might not go crazy, but this is basically what it did yesterday. Just above VWAP. Similar type scenario. It's maxed down 4%. Oh, that's crazy. SI came back down there. DTI up 4.25. Full Gustav. Not read too fast. I can write incredibly fast. I saw those videos you were posting. Those are funny. What are those from? I've never seen those before. The race starts now. Big red candle on SPY there, kind of rejecting. Oh yeah, I guess that is kind of a resistance line. We had 411.48. That's all me. Oh, it's BBC? The GFAI hanging out around BWAP. Bought an MRAI. Yeah, looks good. At least to move to VWAP. Not bad, 14%. A lot of shares. Peak buy, not scaling in. Recipe at power hour. Same as any day. That was me too. Slowly getting filled on these is weird. Like a couple hundred shares at a time. It's just slowly filling it. Yeah, 100 shares at a time. I don't know why. Jim, I thought you were done, man. That gas looks like it's found its top for the day. Starting to come back down. I'm happy with it. I think it's hopefully an uptrend now. Okay, BY is all filled. Well, yep, missed the exit on there. On the red playing possum. Since it is Friday, I would maybe get a little position today and plan on scaling. Get, you know, maybe buy some on Monday, buy some on Tuesday. But it's a little bit sketchy today to buy it. You won't necessarily get a gap up or need exposure for the weekend. This is a bear flag on the 5 minute, so 160 is another 27% down, which it might find support before there at 2. I think it probably has, but how thinly this thing's traded, as you saw, the sell-off can just be exaggerated so quickly. Yeah, let's spread that out over today and the next, few days of trading. And then if it shows like it's found a support and it's starting to rally, then you can speed it up or whatever your buys. But today, you're getting basically the price it was yesterday, which is a good deal. can see what it. You've seen what it can do now. Just that little wick went from nothing to positive. That's crazy. That's your roll. Sell your winners 11:30 to 12:30. Not a bad idea. Yeah, it's just kind of consolidation. Middle of the day. Then maybe some afternoon runners. Oh, that wasn't your purchase on MRAI? Flies coming down here. I know, it's like we don't hear about it. We don't hear about, like, SMX we just found looking at GNS. We're looking at GNS, looking at news, and SMX just happened to pop up on one of them. And by the time we saw it, I mean, it was what, yesterday or 2 days ago? 2 days ago, I think? It already had like 100% move. Yeah, we saw it 2 days ago. We'd already done this, so the proof of concept is already there that it's going up, like the momentum and everything, the volume. We already did 130%. So that news, let's see, 3 days ago, we saw when it was. It was actually the day before it started ripping. Here. Oh yeah, they started recommending shareholders hold them in cash accounts. See. This might be a good long-term hold even. It's kind of an interesting company, what they do. So 4-4, SMX starts an investigation campaign against naked shorts as part of the process. SMX retains Mr. John Tobacco of CEO Block to advise the company. That was at 10:44 at 4-4. SPY flushing there. Yeah, so look, that was 2 days before it started rallying. Huh. So maybe it was something else? No, I think they kept coming out with, there's more articles and briefs. I guess they had a filing maybe telling shareholders to hold them in cash accounts. And then on 4-6, they hired a team to stop naked short selling. Yeah, so it really started 2 days earlier. But then on 4-6, I guess them hiring a team was what really triggered the rally. Yeah, that's a bear flag for sure on the 5 minute. And this daily candle, not very good. It's an inverted hammer. So it's making me think it's probably gonna have a bigger pullback maybe than what we saw today. I know John Tobacco, man. Also an inside bar. double bottoming there. I don't know what's with SMX. Tempted even to sell it. Just that daily. Seems stupid because I was up 1,500 more like half an hour ago. Did I buy any of this today? I think so. I bought it all yesterday. Time me out. No, it wasn't your fault. I'm just messing with you, dude. You didn't have a really big enough position to cause that. SMX has an inside bar. I don't trade him very much as that reliable, but basically a candle inside another candle body. Almost like at the top of it, but inverted hammer though, that's not a very bullish thing, especially after an uptrend like that. $1,500. That is big. When did you start scaling up? Inside bar can be a reversal. So you see him. You don't always see reversals. That's the thing that I don't like about it. But I think to me more what it does is it allows an engulfing candle to be a lot easier. If you get like especially a small body like that. So the engulfing candle could be green and be up, but I'm more looking at this inverted hammer as bearishness. But sometimes you'll see inside bars just as a kind of a consolidation before it continues its move. The shorter time frame though, this looks like a bear flag. However, it is holding this level, this $2 level. I think it still can fill this gap, and definitely it probably will. Just not sure how much of a pullback it's gonna have first. I'm still holding it. I canceled my order to sell it. Scaled in at 268. Then you called the rip, held my position. Scaled in at this high? Oh, Oh, you just really skimmed the top of that, huh? 268. Yeah, no wonder you sold out so quick. Sweat until the second top. Yeah, volume slowed way down for sure. Yeah, this volume up here is getting crazy with this stock. Starting to move back up a little bit here though. I mean, VWAP's still pretty high on it. VWAP's back at 270. Shorting's really easy, you just sell. It's as easy as buying, you just sell. Selling. Literally the same button. Hit sell. Fire at the 515 week top yesterday. Bought it right here. Yeah, I guess that kind of made sense, consolidating. Thought this was going to happen again. I see that. Did a little dip, not too bad. That's not true. That's what shorting is. It's selling it, what you don't have. You're borrowing a share to sell it. So you just held through that little dip. And then it kind of traded flat. Kind of dipped back down. Yeah. Where I was looking at it. Did I look at it? Yeah, you pointed out. I just looked at this double bottom. Thought that would have been a great entry. And I know those from trading SPY, just those little intraday double bottoms and whatnot. I was trying to catch one here, and I did. I just got impatient. But this one didn't have great signs, really. I was kind of forcing it a little bit. Because it was... Yeah. It just started to show some weakness, it seemed like, here. Close to a double bottom. SPY double bottoming there, too. Yeah, you have to have margin enabled to be able to short. Only enough for sashimi. Well, it's holding up. I mean, SPY made it down to 153. I have orders to close those covered calls. Probably won't fill today. Video finally ripping. Little bounce up to VWAP just with the SPY there. I don't know if I'd say it's ripping. If you zoom out on the video, one of you guys pointed out a head and shoulders, which is definitely there. And bearish MACD and red under the 9 now, so I think this is an easy bearish trade, especially with how the market's seeming like it's at a top. But we'll see. That's what makes a market. You go long, I go short. Full circle, I forgot what shorting was. Yeah. I was able to day trade some of those ones you mentioned, Jim. I probably would have jumped in on VWAP tests. This one potentially. remember the other ones, but this one being above VWAP, this definitely could be good double bottom test right here on VWAP. All those AI tickers. Ah, Getty going 9%. It continues just to kind of grind. GTAI can do it next week. Ain't you, GTAI? 145. See if we get a move to VWAP here on the old TAL stock before close. GME is melting down. I don't know about SMX. I don't know. I'm trying not to have my bias. The hourly, there's an RSI divergence. Or no, I'm sorry. Wait. No, there's not. The longer trend, it just still looks pretty nice, other than that candle, but oh, little drop consolidation maybe before we rally some more. I'm surprised the news on this one with the task force they put together actually came out 2 days before this rip. That's kind of surprising. Today's Friday, yep. Eating banh mi. Banh mi? Money was notorious short. Stable stock for the weekend. By BBBY. Certain won't go up. Very stable. Yeah, that's when we get margin called. Sure.
I don't have any hair.
Oh my goodness, it's all cut off.
Yeah, but I don't
Handsome. Yeah, you get margin called either way, long or short, if you're trading on margin. The thing with short is you have to open it on margin, so. Smacks, very good. Very good cereal. Yeah, there you go, BTPI, a little rally.
Tight needle to thread, but when you start having stock charts that look like that, I'd imagine confidence starts to fall away.
Yeah, that's certainly the case. Keep in mind, you mentioned the $180 highs. This is also a company that IPO'd at $78 a share. So I think it depends on, from an investment perspective, when you got in. I mean, at these levels, if you take a look at the median price target, analysts expect that it could more than double from these levels, so more than 100% upside, because the median price target is $27 a share, so definitely room to the upside. However, if you got in at 180 or 78, I think your confidence is pretty much waned. I will say, though, I mentioned Rivian's down about 30% so far this year. Obviously, down much more than that from those all-time highs. But at this point, still 65% of analysts have a buy rating on these shares. Another 25% have a hold rating. So very few in the sell camp, only 2 total at these levels. So not completely pessimistic on this name, but I think with constrained capital, with the cost of capital being higher, it certainly has its fair share of headwinds. We know that Elon Musk has warned that some of these other EV automakers could basically run into bankruptcy issues. Obviously, Piper Sandler has some concerns, $4 billion to fund its growth through 2025. So I think, not without headwinds, but depending on how you look at this, you could say that there's, more bullishness than anything on the street, given that 65% have a buy rating at this point and a $27 price target, which is, almost double where it's currently trading.
I think that's a good point, Caroline. I almost want to throw away the chart from 2 years ago, because I think it's all relative now. Like you said, it depends where you got in. I think right now a lot of people could say, hey, with shares down so significantly, it perhaps could be an attractive buying opportunity. They have just got to get their costs under control, because if Tesla's having problems, I can only imagine that the picture for their margins also isn't looking too great. But we will leave it there. Appreciate all the insight on Rivian today. Have a wonderful weekend. Caroline Wood, Senior Markets Correspondent for the network. Coming up next, we're looking at Spirit AeroSystems, which is down 20%, pacing for its worst day in nearly 3 years. On some Boeing news, we'll discuss that more with George Tillis coming up next.
I think I received your message. YouTube chat? Yeah. Great. Boeing have bad news? I don't know what their news was. Looks like it had bad news. Yep. A lot of volume, big sell-off. Manufacturing issues on the 737 MAX. Pause of deliveries amid supplier problem. Yeah, that was probably the bad news. Oh, that was the other one I was thinking about, or that you mentioned. Let's see, this one's below VWAP. I don't like this one as much. Not a nice entry anywhere. Alpha. Ah, good old Luxembourg company. Biotech probably failed some drug trial or something. This is what's going to happen with some of these stocks I probably bought today. Ions and MCRB. Hopefully one of them gaps up 500%. But it gapped down too. Still Still no BBBY love. Getty 9%. Hold on, Getty.
Like I said, or Boeing, but you look at the breakdown of that, it's close to 78% of that goes right to the 737. So it's really hitting the heart of Spirit AeroSystems, which unfortunately is down still. I mean, in the last 5 years, down about 65%. And in fact, this is not a COVID problem. This has been a Boeing 737, Spirit AeroSystems mixed problem that goes back to 2019 when the total sales for Spirit AeroSystems were at their peak around 7.8 billion. And last year, unfortunately, they only generated about 5 billion. And of course, their net income last year was negative 500 million compared to back in 2019 when it was positive 600 million. So unfortunately for the company, they've lost money every single year since 2019. And that's why you've seen the stock down significantly since then.
You know, George, if there was more players in this space, if there wasn't like a bajillion things red tape-wise, regulation-wise to get these products approved, if they weren't, like the most expensive items that you can buy in manufacturing, this 737 MAX, we probably wouldn't even be talking about it anymore. But the fact of the matter is, there's 2 players, there's not that many models, all these purchases happen, and ultimately we got to get this 737 MAXs made and we got to get them delivered. But this, to me, is just like, because of that situation, this is like an unsolvable problem. This thing is so cursed. Everything that goes on with this this plane just seems to be going bad. Consumer confidence in this thing cannot be good, and it might be the safest plane ever in the end, but like this has been a 5-year story at this point, it seems like.
It has. Look, if you look at Boeing, I mean, at least on a year-to-date basis, or actually since I think November, it's performed quite well. The reason being is the expectations for 2023 were full year profitability, but that might actually take a little bit of a hit based upon the deliveries of this particular plane, which seems to be at the very least halted for the moment. So things can change. Maybe things will turn around based upon this being not necessarily such a dire situation. But when you look at Spirit AeroSystems, they're not expected to be profitable on a consistent basis until 2024. So they're lagging behind. And you talk about a curse, I look at it and say it's a very complex machine. It's a complex industry, which again is very specific to specific companies. It's intellectual capital that can't be reproduced by multiple competitors. And that's why there really is single suppliers in many instances, in this case, of particular components for these aircraft. So that's the issue. There's no competition because of the complexity, but at the same time, it's actually a good thing if things are going right. But if in this case, there are going to be some engineering complications, which there still are for the 737 MAX, but it really is a very critical plane for Spirit AeroSystems. It is very much so for Boeing, but at the very least, Boeing has other revenue streams, including, of course, other jumbo jets, aerospace and defense, to insulate itself from the 737 MAX issues. But I think this issue will be resolved. But unfortunately for Spirit AeroSystems, what this does is it creates a situation where maybe that profitability expectations for 2024 gets ratcheted further out.
GTI looks like it came
because
down
again,
a
it's
little
going
bit.
to cost them a little bit more to deal with because it's specific to their components and their company.
Yeah, and George, it's been fairly difficult to keep the faith regarding all things 737 MAX, but I hope it's not cursed because I've been on one of the new ones. So I hope, luckily I obviously turned out okay, but I hope that for the safety of all passengers, they are not cursed. We will leave it there. Yeah. Appreciate your insight, George Tillis, senior markets correspondent today and all week long. And that also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Pedalides.
All people can be buying Bed Bath. Yeah, a little pop there in MRAI. Just again, I still don't like any entries here, so. But, yep. OP. Faith-based trading. Ace, I bought BY today. Eisen up 13%. Up and handle there, maybe. Pin. Yes, I definitely think it's in an uptrend. Maybe at the top of this channel, though, it's making. No. Oh, it got back into BBBY. Yeah, it rejected that resistance up there, though. I was just able to sold there. Or just keep holding. Oh, I see. That's happy. I mean, it's not like I can't sell it. You just have it in your head that you can't sell it right away. Gotta get that out. Hey, so you could have sold it yesterday, saved this 8%, and bought back in today. 8% down that it just went. Oh, oh, Rick, there you are. I wonder what you're freaking out about. No, I didn't sell it. I missed it. Missed the exit. You definitely missed it. It was up like 50% today. And pre-market was up like 60%. I was too slow on the trigger. Wasn't decisive enough. I was just thinking of it like on that candle. I was like, I should maybe sell this today given that it's Friday. And just close before the weekend. And then this candle just started to grow and grow and grow. I'm like, oh, wow. And this happened. I figured it'd probably bounce back up because this thing's so liquid. And then it just kind of kept going and going. I've considered selling it down here, but it looks good on the long trend. On the daily chart, still I like it. Still has that gap. Still has some more resistance to go up top. Today's candle doesn't look very good though on the daily. Yeah, I'd say it's profit taking. This thing's had like 200 or 300% up to this point. And I forgot to be looking at extended hours too. I didn't have this line then. Looked like it was just getting up to that pre-market high and people just started front running that resistance, and then it just snowballed because it's so thinly traded. Got stop losses and stuff being triggered, and it was a mess. I may or may not still sell it today though. View up's pretty high. I'm hoping for a bounce before close. But that's a big move up from here. It's 23%, so not sure we'll get that. Yeah, I don't know. I think we might see one or two of the AI stocks gap up on Monday. It's 2021. There you go, Rick. See, that's almost as good as just going outside and laying in the grass like I told you. Go on the cruise. That's awesome.
Then will have to be pushed back because of this equipment issue, this parts issue. And it's really a hit to Boeing because it's one of Boeing's best-selling business lines. And it's happening at a time when Boeing is trying to repair its finances after Boeing had to pause its deliveries of the 787 Dreamliner and the 767 jets. And so as a result of this, a couple of analysts are talking, of course. Wolf Research reiterating their outperform rating and $240 price target, expecting Boeing shares to find support at the $200 level in the trading session. Maybe not this session, but some session, I should say. And Credit Suisse noted that potential disruption and said that they chose not to change their price target as well in the stock and kept it at a neutral.
All right. Thank you for that. Renita Young, great to see you. Appreciate it.
You too.
Now let's take a look at the bigger picture. Alexander Reed's with us, Chief Investment Officer, Envisage Wealth. Thank you so much for being with us. So, look, we have a winning week here. In fact, the NASDAQ and the S&P, fourth positive week in 5. But what we are watching is we've seen rates creeping higher. The dollar has been relatively low.
Still head and shoulders.
And we have that back and forth action
Wolfing
as
red
far
candle.
as stocks has been going.
Bearish MACD, red another 9. This is your exit if you're long.
So right now, we really think the market wants its cake and to eat it too, right? They're really making an easy connection over recent price action to say, because inflation is slowing, the Fed will then pause, and that's a green light for risk assets across the board.
$40.
A simple, easy recipe for immediate gratification. And we would say in a vacuum, that's true, that would happen, but in investing, especially in macro, it's never just one thing, right? So for us at Envisage Wealth, we often do a risk management exercise, really examining contradictions around market narratives. And because the market can't have it both ways, right? So for us right now, there's a couple of them that we'd call out. Number one, slowing inflation will allow the Fed to pause soon. And we're quick to remind the markets, there's a 60% chance that the Fed's going to raise rates in 3 weeks from now. And then on top of that, inflation. Yep, go ahead.
No, I was going to say, and that's what I wanted to ask you, because we've gotten in those prints on CPI and PPI.
Bounces yet
your
on Bed
thoughts
Bath
on
today.
the Fed. I mean, if they raise, which seems most likely for May 2nd, May 3rd, what happens next?
Right. So for inflation in court, we got some comments from a federal official out today that said more work needs to be done. Core CPI actually accelerated on a month-over-month basis from February to March, and it's still at 5.5%. So the Fed's target's 2. So, and then if you look out in the back half this year, there's a disconnect there to say the market doesn't believe the Fed. They're pricing in 2 rate cuts by the end of this year. And so when we look at that and to say, the market and the Fed don't cut interest rates just for fun. It's usually coincides with some level of economic fragility or rising recession risk. And if the market itself can sustain itself from spring to summer to fall at a 5% risk-free rate, there's really no incentive for the Fed to cut rates. So there's this major dichotomy between what the market's pricing in at current levels and what the Fed is saying and where inflation actually is on a rate of change basis.
So that being said, what do you tell investors at this point? A lot of folks have cash. They've pulled out cash, put them in money market funds. But we see and know that these banks have done very well on trading revenue, particularly fixed income trading. What's your advice to investors?
Sure. So there's always a level of uncertainty within the markets, right? And to be an investor, that's normal. It's normal to feel uncomfortable. Right now, there's an elevated level of uncertainty. So for us, driving home to clients, diversification will work. And for us, we think bonds
spun
offer
off to
tremendous
MCOM.
total return perspective relative to where the
Along
market
with
is and
a
kind of the
reverse
macro
split.
noise out there today.
That's basically
Bonds
what we're
offer
looking
really,
for on
really attractive total
BBBY,
return
I
when we look
think.
out over the
That's
next
what people
12
want.
months. And then from an equity perspective, focusing on high return
still
on
hold
asset
MCOM.
companies, high free cash
Actually bought
flow.
more. I don't know.
From a factor perspective, low volatility, and then from a sector perspective, healthcare, staples, and high quality technology is kind of our focus there. From an underweight perspective, we were underweight, credit, high beta, high debt. Typically, those cyclical type of companies and industries tend to underperform at this point in the cycle as we kind of approach that zero bound on the growth curve.
Yeah, you mentioned some of the sectors like healthcare, staples, and even some tech. What was interesting is during the turmoil that we had with the regional banks, a lot of people went to some of the large cap tech almost as value, as a safe haven. Do you see it that way?
That's definitely been the trade. If you look at kind of the distribution and the contribution of returns of the S&P year to date, there's a lot of figures pulling out the top 10 names, the top 5 names. And if you do that, it kind of reveals that the S&P is essentially flat for the year. And so it's back to that kind of safe haven, high liquidity and mega cap tech to say if the economy is slowing, that's a good place to hide, which we would favor kind of those mega cap, high cash balance sheet companies as favorable. But you have to consider earnings expectations too, right? Earnings estimates for 2023 have come down, but they're still highlighting 0% earnings growth. And if you look at some of the leading fundamental economic data out there, where we are today, and then look back over history, what that has resulted in from earnings growth, that would suggest to us around 10% earnings growth. So the market's expecting roughly flat earnings growth for 2023. The underlying fundamentals would suggest closer to -10. And so from a valuation standpoint, if that's true, the market's trading at about 21 times price to earnings today with a 5% risk-free rate. For us, that's a tough multiple, and the risk reward just isn't there. So we think that's a short-term kind of trade, but we still think that cyclicals and that trade-off will still struggle on a relative basis over the coming months.
Yeah, I mean, that's basically, you said earnings have priced in a recession, and so many folks, they hear that word, get really jittery, right? I mean, when you say recession, soft landing, hard landing, I mean, how long are we looking at, and when are the rate cuts coming?
So right now, the market's pricing in kind of 2 rate cuts by the end of this year. Earnings estimates, I suspect that you'll start hearing from news articles, news outlets through this coming earnings quarter about an earnings recession, because earnings growth last quarter was negative. It's expected to come in negative again. But the back half of this year is expected to have strong EPS growth. So there's this kind of moment in time during the summer, fall area where analysts and estimates will either be right or they'll have to come down, as would be suggested by underlying economic fundamentals, right? So that's what we kind of focus at. The recent price run-up has been great for equity prices and risk assets so far. But on a go-forward basis, the same risk reward just quite isn't there, knowing that such an economy between what the economic fundamentals would suggest and then where estimates are. So we'll see. We definitely have a better perspective as we move through earnings season over the coming month.
You know about the flat.
Alexander Reed,
We
Chief
fly.
Investment Officer,
Oh,
Envisage Wealth.
You
Thank
know
you.
it is. Boy.
Later this hour, we'll be talking Bitcoin. You saw it get up to almost 30,000
Perhaps not,
this week.
Rick.
Some trends to watch there. We'll also take a look at 2 brands that you need to keep an eye on. NBA
Perhaps
playoffs
not.
begin. Discuss whether this should be in your portfolio, what you need to know. And our panel ready to take a look at the big takeaways from the consumer sentiment report and one luxury category that could be
Yeah, you
at
keep
risk
talking yourself
of
into
a
stuff, you might actually pull the trigger and
Up
do more
next,
trading
our
today.
guests bullish on CVS Health, shares of a specific regional bank. You'll want to hear more about it. Stay with us.
I buy enough to make it fly. Aha. Sell low. GFAI down a little bit, 3%. BFM TV reports President Macron sign into law reform bill within the next 48 hours. US import prices fell 4.6% over the last year, the largest year-over-year decline since May 2020. Time to start importing some more. France's Constitutional Council clears President Emmanuel Macron's plan to raise the retirement age to 64 from 62. French pension reform. Labor unions reject Macron's invitation for talks next week. Russian economy ministry sees oil and gas exports declining by 6.7% in real terms in 2023. China and India will together account for about half of global growth this year, underscoring Asia's increasing heft in the world economy. BlackRock assets swelled to $9.09 trillion in the first quarter, with net flows into all of the firm's funds totaling $110 billion. Gas prices in the U.S. move up to 3.64 gallons, average the highest level this year. Elon Musk is planning an AI startup rival to OpenAI. Burger King is selling more Whoppers than ever before. I'm moving up here. Yep, MRAI broke that VWAP. Here's set the next resistance here. Up to these candles, $3, I guess, just below. Renewed power hour.
Headline CPI number. That was 5% lower than the prior month. When you think back to last summer, that was between 9 and 10%. So definitely look at the headline number. We're making great progress. The next day, we got the producer price inflation numbers. Those showed actually deflation taking hold last month. obviously what you're paying at the wholesale level is going to start to translate into the retail level. So I thought we saw some great signs that inflation is starting to cool. And of course, that was followed up with the unofficial start of earnings season this week. I mean, the biggest and the best among the banks, JP Morgan, just knocked the cover off the ball. What better indicator for the U.S. economy is JP Morgan? It also, I think, showed how pessimistic Wall Street expectations were for it to rise 6 or 7% like this. So I think we've gotten off to a decent start here.
So what's your strategy? I mean, even though there are people worried about a recession, worried about testing new lows, do you have a strategy?
Yeah, well, first of all, I try and keep my clients upbeat. I tell them there's no better point to put new money in when everyone else is pessimistic. Why is that? Because prices are lower. I actually like the fact that earnings expectations for this quarter are for the second quarter in a year down 5%. When earnings expectations are low, companies have a better chance of beating, and that's, I think, what we saw with some of the banks. And I mean, you know, the Federal Reserve has been doing its job. Kudos for seeing that inflation cool. But, you know, you can quibble as to whether their job is going to end with what, quarter-point hike in May, maybe one more in June. But the fact of the matter is we're very near the end of the tunnel. Even its own staff said, look out for a recession in the second half. So I think the Fed is going to, at worst, pause very shortly here, and at best may actually be cutting rates in the second half. And of course, once stocks really fully digest that, I think we can move forward here.
You know, that's amazing. So even cutting in this back half of this year, huh? So you're really talking about sooner than later. That being said, when we get to stock picks or themes, regional banks have been on your mind. You're watching Key Corp, for example. Tell me about that one.
So, you know, everyone loves the big banks because they see everyone being nervous about the smaller and regionals. But what we've done here is taken a fine-tooth comb and looked at some of the very best regionals that will be sure survivors and are now just trading at pitifully low valuations. So let's take Key Corp. You know, it was founded in 1849. It's seen some tough times, the Civil War, the Great Depression, you name it. It's been through that before. $170 billion in assets spread out over 16 states. What I'd like here is two things. One is a middle market bank. So if you're a mid-sized company or a mid-sized consumer, you know, you may say JP Morgan is the safest place on town, but try and make an appointment with them. They don't want to talk with you because you're not big enough. But there's certainly a room for a place like Key Corp. Let's look at the valuation. It's down 45% from its recent high. This is like $12 stock should earn $1.74 this year. Trading about 3 times cash flow, below book value. And of course, let's look at dividends. There's nothing like a dividend in volatile times. Your dividend is just under 7%. It's only a 42% payout, so there's room to run. And over the last 5 years, it's increased at 14% annually, plus earnings growth up over 11% annually. So I think Key Corp may have been thrown out with the bathwater. Stay diversified, pick up a Key Corp to take advantage of this regional bank sell-off.
All right. And then we turn our attention over to the pharmacies and health. And by the way, I mean, I saw Merck at a new high today. I mean, there are a lot of names that are hitting 52-week highs that sort of grasp my attention. But that being said, CVS Health is one that you're watching. Tell us why, and you like this one. Thinks it has upside potential?
Well, first of all, it's a market leader. It and Walgreens, it's a duopoly out there in terms of which drugstore you go to. But of course, CVS is much more than a drugstore. It owns Aetna. We just got a good earnings report, of course, from United Healthcare. So Aetna's probably going to have some tailwinds there. It's also getting into having some primary care facilities right within the stores, take advantage of another way to reach out to the customer and so forth. But look at the valuation here, Nicole. I mean, you know, it's down 1/3 from a recent high, 40% from its all-time high. Are those sell-offs justified, Well, I mean, they're going to earn $9 a share this year. It's a $74 stock. So, it's really under 10 times earnings. They've got so many levers to reduce costs if they have to, buy back stock, do other things. Of course, if recession is front of mind, what is less prone to fallout from recession than healthcare? You're not going to not go to the drugstore if you're not feeling well due to weakness in the economy.
Any other themes? I mean, we talked about some of the banks today that came out. I mean, BlackRock had its profit drop about 19%. JP Morgan record quarterly numbers. We showed Rivian and Lucid down today. Boeing's under pressure when we think about industrials or aerospace. Tech was a safe haven to a certain extent during the weakness that we saw in regionals. Any other themes that you would say, hey, I sort of like this group, or any other thoughts for investors, ways to make money?
I'm not going to name any specific names, but we like the REIT area generally. Now, that has historically been a hedge on inflation. You've got real estate, of course. If I'm right that we're closer to the end of interest rate hikes, if interest rates that stop going up or even come down because they're leveraged, I think that will do well. People, again, are going to be looking for dividends if this market gets volatile going forward. The REITs, of course, there's no tax at the corporate level, so all their cash flow comes out as dividends, so they have above average dividends. There is some genuine concerns in the commercial real estate area. I get it, but there's no reason that it should have infected the whole sector. So companies that are focused on high-end shopping malls, I think also could do well and are trading well off their highs. Historically, the REITs have actually outperformed the S&P 500 through thick or thin over the longer period of time. Haven't for the last 18 months. This could be a good time to take positions.
All right, David Dees, wonderful to see you. Thank you, Managing Principal and Senior Portfolio Strategist at PBAC Private Wealth Management. Thank you. Coming up next, we'll discuss the outlook for Bitcoin after returning to the 30,000 level. Is crypto winter over? What do we need to know? Coming up.
tempted to do some cash grid puts on AMC again. Popping up on the naked put screener. The 5 strike though, which I don't think I want that close to the money. But Ivy's crazy on the whole options chain, so get a 4 strike. I like 4. And I missed an entry on Carvana. Put that low. Same with the SPY. AMC is still coming down though. Oh, big bounce. My cash grid puts on Rivian I closed out of yesterday, thankfully. Those were way too close to the money. Oh, what's wrong with it? GME bouncing there. With the SPY. AMC is just super volatile, man. Oh, GNS with a pop-up. Oh. I did want exposure to GNS. Won the gap fill first. I might grab this. Might get engulfing candle today. Dang it. Out of buying power, aren't I? Whoa, what can I close? Close. I opened up Tesla, BY, CXAI, move. I close SMX. Or SI. It's funny, GNS is popping on the same type of catalyst as SMX though. GNS has a lot of upside to go. I was hoping to get a gap fill pick up on it, but I'm not sure it's going to do that. MACD crossed bullish 2 days ago. Had that big run the other day too, but I waited on that. Now today it looks like it's setting up an engulfing candle on the daily. I have an order to sell my SMX, free up capital for GNS. Or I could sell, close SI, down the shares. Oh. Yeah, maybe I'll wait. I like GNS though. This gets in an engulfing candle on the daily. Might be a nice little bottom here. SI is not trash. You're trash. Cell phone towers. Can't go wrong with a cell phone tower, right? Crown Castle. You always swing trade dividend stocks. I don't get it. Just for the safety? $5. Right back to VWAP. Rally, Ralito. They held that money. Oh, BY, a little move up. Back up to VWAP. It's happening, finally. That gas is rallying more. But on SMX is disgusting. Can't even see my bid on the L2. I ask. I didn't sell it out here. I really thought it'd just be a volatility wick down and then it bounce back up, but that was awful. Wake me up when I hit 5. Okay. No, you should close all your positions, Rick, and go on a vacation, on a cruise. Maybe some sort of buyout. Little pop, up a bit from the lows. Still down 7%. Genus, I'm back down, but I am liking it. Does look like it's starting to form a bottom for sure. This chart actually looks similar to SI. Might not get an engulfing candle today. Getty continues to climb. 10.5%. Profit take coming in at 230 on the AI stocks. Genus is 72 cents. All right then. SMX coming down more. It's down almost 10%. I'll go red on my position probably. Bigger risk than other streamers. I don't know if that's a good thing or not. GFAI down a little bit.
With inflation, all the focus on some of the pressures that consumers have been feeling as prices have been on the rise and nowhere near as much as at the pump, right? We've seen that continue to rise. AAA has been reporting, and I've been keeping a close eye on it today up to 366, a pretty regular trend to the upside, whether you're talking about up from yesterday, up from last week, up from last month. Now, we are still down from last year where we were, but I think a lot of the bid activity that we saw today, Nicole, look at this, up to 82.53 right now, about 0.5% to the upside, but this week to 83.50. The bid activity, weak dollar, also the IEA, OPEC, and the EIA this week. But let's begin with the IEA. Today they said consumers are confronted by inflated prices for basic necessities will now have to spread their budgets even more thinly. They said this augurs badly for economic recovery and growth. They were talking about the OPEC cuts basically recently and how that's going to pull some of the supplies away. They said with demand rising, continuing to increase the remainder of the year, we're expecting renewed inventory draws and upward pressures on prices. They said that they were already expecting to see a shift into deficit in the second half of the year. Now with these cuts, that actually accelerates that. They expect that to happen much earlier. So again, I'm not surprised to see prices on the rise here today. Definitely, supported by the U.S. dollar, as I mentioned, to the downside, weakening again this year to new lows. So let's keep an eye on that. Obviously, the demand narrative of China tied in this, but I think today the big move up and the move we've seen this week tied to OPEC, EIA, and IEA and some of the comments they've had.
Yeah, understood. I know you're watching gold really closely. What's going on there?
Well, similar situation with the dollar weakening. We saw gold benefit from that, and this has been kind of in line with the trend. A lot of people keeping an eye on gold, supported recently around 1900, back up and through 2000. But you know, this bid really came into play. If you look at the chart, I mean, we're going back to there it is. I mean, the fall of last year, we bottomed out around 1630, 1640. Look at
I don't think it's going to hold too.
type pattern after selling off into those lower levels into the fall of last year. As rates have come off ultimately, the U.S. dollar came off. I mean, when gold was down at 1650 down there in the fall of last year, that triple bottom we're looking at in the middle of the screen, we had the dollar over on 114. The dollar this week down to 101. I mean, so significantly, and through the middle of the range that we established last year,
I guess
well off that 114 high. That's all going to support again. As I mentioned a minute ago with crude, definitely seeing that with the gold prices.
That was huge volume. That was the most volume we've seen. Was that profit taking?
Above 2100 though.
I guess a little bit before it.
All-time high up there from August of 2020. That's the next big hurdle.
All right. Thank you for that. Ben Lichtenstein. Appreciate it. A great week. We'll have a busy one next week as well. Nice to see you, Ben. Thank you. Now let's shift our focus and talk about basketball. Well, look, the NBA playoffs begin tomorrow. Let's go Knicks. All right, whatever team you vote for. But in the meantime, joining me right now to talk about some of the brands to watch, and this is the big stage, right? Justin Heller is with us, founder and president, Heller Private Wealth. Thanks for being with us. So, I mean, this is big business, and that's really what it's about. You have a couple of names to watch, and one would be Pepsi. Why is that?
Hey, Nicole, thanks for having me back. As you said, with the NBA playoffs coming up, it's the big stage, and one of the brands that we can expect to see a lot of is Pepsi. So Pepsi owns Gatorade, Pepsi, of course, Mountain Dew, Doritos. And based on what's going on right now, seeing a lot of volatility. We've seen some positive signs, some negative over the last couple of days. Pepsi's just been a defensive company. They've been slow, stable, and steady through both some ups and downs. I mean, last year, roughly 7% return. This year, up about 2%. So my opinion, I mean, I like to be in more of a defensive, stable name when there's a lot of uncertainty out there right now.
Pepsi has shown its colors. I mean, some people would say it was a snack company because you mentioned Doritos, but the truth of the matter is they do very well with snacks, and these are somewhat type recession resistant, I guess you could say. But with the reopening of venues, that's got to be a good thing for PepsiCo. Final quick thought there.
Yeah, absolutely. I mean, it is. It's a snacking company. It's a cola company, like you said, recession proof. To some capacity. So I think the future is bright. It's been good throughout tough times, so we'll watch and see.
So another name that you're watching here is DraftKings, and as things kick off and the betting begins, tell me a little bit about this name.
Yeah, so DraftKings to me is kind of on the opposite side of the spectrum. So this is a name that we saw roughly 60% loss last year, and now up again roughly 60% so far this year. So a high flyer. Expect to see a lot of ads from the sports gambling companies, and of course, the big question mark for DraftKings is when are we going to get legalized in certain states? I'm based in Florida. I'm from Florida, and Florida is projected to be one of the best sports betting markets in the world once legalized. So there is a lot of upside there with DraftKings. I'm sure they're going to make a big push with the playoffs. But that is not quite so defensive and slow and steady like that of Pepsi.
All right, and look, you're right. I mean, it's up 66% this year. That's no joke. Everybody would be happy to have that kind of return. That being said, let's talk about any other names or brands that you're watching closely that could show up in the big games.
I don't have any other brands that we're focused on or watching closely. I'm curious to see if we're going to see a big crypto push this year. This point last year and years past, crypto was starting to take over in the advertising space. So after what's gone on, not sure if we're going to see some advertising from them, but we'll find out this weekend. And some other exciting news in the NBA world is the players and the league finally came to an agreement on a new collective bargaining agreement. So some new interesting details have emerged there. And then, of course, the most exciting part is the actual games. And your recent guest, Giannis, looks unstoppable right now.
Oh, he's amazing. I mean, we absolutely love Giannis. We loved having him on the network. But the truth of the matter is, you're right. You know, an MVP, a champion, he's incredible. How about when you talked about the collective bargaining agreement that it's done, why is this a good thing to have this sort of done now at this point, and what does it mean?
Yeah, definitely. So there was a lot of back and forward. Not there yet, but getting close to maybe seeing a lockout, which nobody really wants. The players don't want that, the owners don't want that, and us fans don't want that either. So they have some new interesting things that they agreed on. There's supposed to be an in-season tournament, which I'm not sure how that's going to shake out, but if it's anything like the NCAA tournament, it should be exciting. They have put a cap or a restriction on load management. So if you want to qualify for one of the awards, you have to play 65 games, which I think is also a good thing for the fans to see. And they've added some salary cap restrictions, luxury tax, things like that. So it's just good to get this out of the way. Now we know there's no lockout for another 7 years, and hopefully some of the changes are good for the league.
All right. Justin, that was great. Do you have a favorite quickly or no for the games?
I'm rooting for the Brooklyn Nets. Not your Knicks, but the Nets. I like the Nets.
Not the Nets. No, I like the Bucks a lot. And the Knicks.
There, we can agree
Justin
on that.
Heller, founder and president, Heller Private Wealth. Thanks, Justin. Still ahead, we bring in our panel to discuss April's consumer sentiment report, the category that you may want to watch in there, and the demographics, what could be the prediction here that we need to know.
Oh, it just clipped 199. Bounce, we'll see. Good. So I made it down to 151. AMC down 8%. Nirvana down 3 at $9. GFAI bouncing a bit there. On the video broke through BWAP. Can't let a Friday be bearish. Can't let a good Friday go into waste. Gotta show strength into the weekend. Must look strong. Nvidia and Tesla have news. Elon's doing something with AI. I didn't say anything about it mentioning NVIDIA.
Number hot on the heels of this report that showed it edged up in April. But the thing that really grabbed folks' attention were the expectations for the year ahead, where the bets were 4.6% for inflation. And that was up from 3.6%. Pretty big move, and that spooked the markets. Eddie Yoon's with me, founder of Eddie Would Grow LLC and co-founder of Category Pirates. Also, Ted Ross, senior industry analyst at Bankrate.com. Thank you both for being with us. I mean, certainly that inflation expectation.
Hold on, look at this. This is the same body language my wife gave me when I asked if she had a boyfriend.
To ask because there are so many acquisition
Sorry, it's still loud.
Rumors floating around. Do you care to comment on any of those rumors popping up in the news these days?
Acquisition rumors? No, I haven't actually heard any of them, so I guess I really can't comment.
Why the fuck you lying? Why you always lying? Oh my god.
So she said she hasn't really heard of the rumors. The rumors. But she'd have a big pause there.
That was true even before the pandemic, but I think has accelerated during and now after the pandemic. I mean, it's something we see in so many respects. There are definitely some recessionary behaviors going on now, especially among people with lower incomes, lower credit scores.
But don't hold winners like this.
Access to credit. We're seeing people pull back on
I was about to start scaling out literally right.
But then on the other side, we do still see robust demand for dining out and travel.
Or just,
I think that speaks more to higher income folks. You know, there is still some excess savings out there, but it's at the higher end of the income spectrum. Lower income folks, unfortunately, they've long since spent that extra cushion.
Oh, is that from a split?
So at this point now, thank you for that. I mean, at this point now, we have to try and gauge what to expect. Eddie, what are you watching as people are waiting on the next best thing?
Yeah, no, I think it's always a fear when the things that you never had to worry about, like is my money in the bank going to be still there for me? Is the FDIC going to cover me? So all of the the SVB stuff and everything else has shaken the confidence of a number of consumers. So I think they're going to wait a little bit. That being said, there are still always new activity, as Ted says. People are spending more money on the new things. So categories that are completely different that they haven't spent on before. Things we've seen like ChatGPT has gotten to 100 million users in 2 months after the launch. That's a record. The facial business that I'm part of, Glow2 Facial, saw sales skyrocket triple digits in Q1. So I think people are looking for what's new, what's different. Let me try that out, and the things that are old and old that they don't want to do anymore.
Yeah, and as we look at the different sectors, Ted, what are your thoughts as you go sector by sector and where we might see tightening or growth?
I think services remain hot. So I still think there's a lot of pent-up demand for travel. Last year was kind of the summer of pent-up demand, but that's still there this year. And in fact, international seems to be doing even better than domestic this year. So there's still some room to run there. It really shows in the retail sales numbers that bar and restaurant sales continue to pop. Another sector, really the only other one that did well on a year-over-year basis in the latest retail sales report is e-commerce. That one surprises me a little bit because, one, we kind of thought that trend was largely played out, and two, we keep hearing about services and experiences and less about physical goods. So there has been a pullback on spending on certain physical goods like cars and electronics and furniture, but e-commerce is still strong. You have to wonder, maybe people are buying things that support all these trips and meals out. Maybe it's new clothes and luggage and things like that.
Right, understood. As you mentioned, luggage, I'm thinking about Louis Vuitton. I see the suitcases, I see the bags. A terrible occurrence abroad at the LVMH headquarters. That being said, Eddie, you mentioned some of the luxury goods and LVMH specifically as something to watch. Why?
Yeah, no, they had a great quarter, so that's wonderful for them. One of the things that I did notice was that the CFO did say that the U.S. numbers are a little soft and that it would appear that the Chinese consumer is really driving their great Q1. So those consumers are coming out of lockdown and are spending on maybe, again, some of that pent-up demand that Ted was talking about. The part that I am worried about as a harbinger of what's to come is Bain says that they had a forecast that personal luxury goods would rise 3 to 8% this year, which is down from 22% last year. So I still think that people are going to spend. I agree with Ted around services and experiences are going to be hot. I think things that are more digital in nature versus analog will probably also be hot as well, just because of all the things of courses that you can buy that are digital and transformation versus physically being in school and education. These are the transformations that I'm seeing sector by sector. So services and experiences and digital versus not.
Right. Final thoughts here, Ted. As you mentioned,
as far as laptops, I like Apple a lot.
The Fed
Build
is likely to
really good
raise
on them.
in May. Where do you see the
Very
optimism?
fast, intuitive. Just like
I do think, unfortunately, that it's
trackpad's
increasingly
really nice.
likely that we're going to get a recession later this year. Hopefully a mild one. I mean, maybe there's a bit of a silver lining in there. And also the fact that that could finally break inflation once and for all. I think we are getting closer to the end, not just of this hiking cycle, but also, we did get some good news this week on both CPI and PPI. It feels like the Fed's medicine is working. Inflation is coming down. There are, of course, consequences to that. Potentially
whatever you're
higher
typing on
unemployment
probably
rate.
has a
We know
CPU
all
in
about
it.
high interest rates,
Central
pinching
processing
credit
unit.
card borrowers and the housing market. But hopefully we're starting to see some of the light at the end of the tunnel.
Yeah, final quick thought, Eddie.
Yeah, I agree with Ted. If the sooner that they can come down with interest rates, the less incentive consumers will have to park their money in savings accounts, and they're going to go back and spend. So this is largely in the Fed's control. Hopefully they respond as quickly as they did rising it this time, which was a big change from the slowness that they had to respond in the first place. So.
Thank you for that. Eddie and Ted, always nice to have you on the show. Thanks so much. Eddie Yoon, founder of Eddie Would Grow, and Ted Rossman, bankrate.com. Thank you both. That's going to do it for us here on the watch list.
Yes,
Thanks for being with me every single weekday at 11 a.m. and 2 p.m. Eastern Time. I'm Nicole Petalides, live at the New York Stock Exchange. Thank you for watching, but keep it right here. Market on close.
Maybe meant to say PC, personal computer. But I'm going to say what you have as a computer. Anyways, GME Up a little bit from the low. So flat. I bet the IV's even lower now. 42%. Dude, this thing. What in the world? Yeah, that's crazy wild. Ready for Jenny? I don't think Jenny's coming on. Pretty sure Jenny's home drinking a 40. I closed my calls to GME this morning on this pop. Had a little profit on them and I closed them. Will I get more? What you're asking? No. I might for earnings. Might play earnings again. But we've got a just consolidation up here. It's in an uptrend of sorts, I guess, because I'm not moving from earnings still, but it's not great. Our MACD flipped bearish yesterday. Got these engulfing candles to the downside. I don't think it's necessarily going to flush and fill this gap right now, but if the market starts to crash, I think it could. But I think it'll probably just keep consolidating. I don't see any momentum yet. Nice crash for that too. Yeah, you figured if it dropped that too, it was gonna move pretty quick. 182, so 173 is what thereabouts, kind of that area. Or 161. Wow, what a rug pull, man, that's crazy. I mean, zooming out, it's not necessarily, it's just cooling off after that big rally it's made in the last 4 days, 5 days. But intraday, that's pretty gnarly. If I have a big enough following where I shouldn't mention stocks with that low of a flow, or that thinly traded at least. Maybe not a good idea. Given the fact that it seemed like my sell yesterday moved it, just me alone. BBBY up to VWAP there. Express yourself. Bounced up to VWAP. 100%. Yeah, just gotta follow the hype and the trend. I mean, AI has been hyped for like a couple months now, but really just, I guess, the last week, we've seen crazy moves from it. The ticker AI, of course, this thing was kind of the first initial one. That was in like February, so I guess that was a couple months ago. January, February. But the fact that it's held up, so it's kind of cyclical. We'll probably get another AI rally if this one's over, maybe in a couple months. Or maybe the next one will be, what's it called? NFT rally or something. NFT stocks. Or EVs, you know. Or 3D printers. I don't know if the AI thing's over yet. I mean, it takes time for it to fully get through the system and people to hear about it and invest and follow momentum.
Wild, some hawkish remarks from a couple of Federal Reserve officials, and an overall rebounding in consumer sentiment earlier today. We saw the financials was the only sector up, but right now consumer sentiment, consumer discretionary has climbed since then, along with a few other sectors. But looking at earnings, PNC Bank was the first regional bank to report earnings earlier this morning. Earnings per share and revenue came in. Earnings per share above expectations. Revenue came in right at that estimate. Both of those measures were above last quarter and last year, and investors saw it as a good thing. You know, average deposits for PNC increased by $1.3 billion to $436.2 billion. When it came to JP Morgan, it was better than expected earnings as well. We saw earnings per share above estimates at $4.10. That was above last quarter and last year on revenue of $38.3 billion, also above estimates. But just last month, only 1 month, JP Morgan took in $50 billion in deposits as some customers fled the regional banks. But deposits on a whole for the quarter fell about 7% for JP Morgan during that quarter. Net interest income, however, did see a slight increase, and not just a slight, it was actually up about 48% during that quarter. Let me move over to Wells Fargo briefly. The earnings came in better than expected, topping estimates as well. The earnings per share was $1.23 more than estimated, and the revenue was $20.73 billion above estimates, and that was about a 17% growth year over year. Total deposits fell year over year 8%, but net interest income grew 45%. And so Citigroup is the last bank that I'll talk about. Shares were higher today, but we'll see where they are right now since shares have been coming off of their highs of the day for banks. Right now, adjusted earnings per share came in above estimates at $2.19. Revenue also above estimates at $21 billion. Citigroup deposits were roughly flat from the year prior, but total loans were down and net interest income saw a 23% increase. So as you can see with these bank earnings, most of them were considered better than expected, but we did see different expectations when it came to the net interest income and when it came to the amount of loans that these banks were actually able to offer during that quarter. And that may also make the difference as well when people are looking at these stocks longer term.
All right, thanks so much for that breakdown, Renita. So, Kevin, obviously a lot to kind of digest here, but taking a look at the share reaction, Citi and JP Morgan quite a bit higher today. Wells Fargo essentially flat, basically a little bit negative right now, but PNC kind of took a turn or took a dive, even though it actually seemed pretty good. What happened there? And I guess, can you glean anything about these results as you look ahead to next week, especially as you think about the regionals? Because I know PNC is kind of a super regional, right? It's bigger, it's considered higher quality. So can we extrapolate anything as you look ahead to next week in terms of banks?
Yeah, I think that's a really good indication of what we may be looking at when you divide big banks versus small banks. Even though PMC, like you said, it's a super regional bank, but still the flows in general are going from smaller to bigger, Caroline. They're going from cash to money market, and that's the way the cash is traveling. What does that do to the overall banking system? It's hard to say going forward, but if you look from a macro perspective as we move into next week, you know, the banks will keep coming. We still have Goldman Sachs. We still have Bank of America. We still have some banks at the beginning of next week. Then we move in to more high cap tech. You know, next week, today was the unofficial start of earnings season when we got the banks. 67 names in the S&P will come out next week. 6 in the NASDAQ, 6 in the Dow Jones. We'll get a good look. Tesla coming out on Wednesday will be a good name. But, you know, this is still a market where the macro and the micro are now combining, right? Up until now, we've been dealing with the macroeconomic effects of this market, of this economy. Now we've got to do both, right? So when you look at this market from a macro perspective, the dollar's higher. If you look at yields, they started the week below 3.3. Now they're going to finish the week, you know, over 3.5. That's tough on stocks. The dollar, which has been trending lower, is firmer today. That's tough on stocks. Crude oil has rallied from $70 to $83. That's going to affect the overall economy. So there's macroeconomic factors on the economy. Micro is the individual names. We'll get more next week. You know, this is going to get fun, Caroline, and the pace of earnings is only picking up. So there's more to come. You know, some of the VIX might be a little Friday. I would expect the VIX to be higher on Monday as they take days out. It's a little Friday-Monday relationship between the markets and VIX, but all things considered, Caroline, we went from slow earnings and none. It's coming like a fire hose starting Monday.
All right, I'm tired just thinking about it. So, Renita, Kev mentioned, I think he said 67 other names set to report next week. So it's not just the banks. So he mentioned Tesla. We'll be focusing on margins, of course, for Tesla, but Netflix also reporting. So we'll be focusing, of course, on subscriber figures. What's on your radar specifically for Netflix, Renita?
Well, right now, you can see Netflix shares are falling ahead of those earnings, and analysts are giving their expectations for Netflix. Right now, earnings per share is expected to be at $2.81 a share on revenue of $8.18 billion. And it's the first test of the company's new ad-supported tier and password sharing crackdowns. Those will be the two major themes. And all for the past couple of weeks, analysts have been split on whether or not either of these things would translate into higher revenue or it would scare some subscribers away. UBS believes the first quarter is going to show some continued progress toward that reacceleration of growth, but he feels like Netflix is going to face some headwinds from the password sharing crackdowns. Now, Citi says that the quarter may be confusing because of crackdowns as well as that ad-supported tier, but believes that the password crackdown will not result in incremental revenue, and that the ad tier instead is going to add about 65 million subscribers with average revenue per user above video on demand levels, right? But then Benchmark said something totally different this week, saying that the Netflix crackdown on password sharing will likely boost the average revenue per available member. So analysts are all across the board on what these two major things could do to this.
Oh, they had to cut her off. It's not Jenny.
Thanks for that update, Renita. And Kev, we mentioned Tesla. gave away the lead by saying of margins are of course maybe in doubt, in question. It's something that we talk about all the time, I feel like, on Fast Market. So tell us what your expectations are for Tesla. We're seeing shares lower today on news of additional price cuts in Europe and Singapore and Israel, right? So further calling into question at what cost do those price cuts come?
Yeah, exactly. Here's the good news if you're watching Tesla. They still have the profit margins that allow them to lower prices and still be extremely profitable. Now, hopefully we'll get a little more color from Elon Musk on, is this a competitive advantage that he's pressing, or is this a demand problem that he's trying to abate by lowering prices? You know, it's always must-see TV when Elon Musk explains their earnings, but they're looking for about 85 cents a share on about $23.5 billion in revenue, Caroline. But obviously it's how Elon Musk sees that business going forward, his comments on these price cuts, because you know, when they do them without any color, people tend to make their own assumptions on why that's happening. I personally think he's doing it to force a competitive advantage. We'll see if that plays out, though, Caroline. There's a lot. Obviously, Tesla's earnings are on Wednesday the 19th, so that's coming up in the middle of next week. I expect that to be an action-packed day, Caroline.
All right. Thank you both so much. Renita Young, Kevin Hanks, appreciate you recapping today and getting us geared up for next week. Have a great weekend. Let's bring in our next guest. Kuei Win is CIO of Equity Strategies at Research Affiliates and joins us now. Kuei, thanks so much for joining us. Really good to have you on this Friday.
Thank you for having me.
So we're going to take a step back away from earnings and kind of just focus on the markets, at least to start. You know, I had said market actually positive for the week, but we're seeing some red arrows today, despite it seems like maybe we're going to have an upbeat day at the start of trading. Why the fade? Why the red arrows today?
Well, I think it was coming off of yesterday. Yesterday was almost like a Goldilocks kind of day from a macroeconomic perspective. What you got was very moderate data on the job market. So what we saw was jobs were moderating, but not too much. But at the same time, we also got some very encouraging news in terms of wholesale inflation not being too bad. Today was just the opposite. I think the thing that really spooks the Fed is if inflation expectations become unhinged, right, to the upside. Because once that happens, it's really hard to control inflation. So what you got today was commentary from Fed officials saying our job's not done. You know, we get back to peak rates. You know, rates go higher and higher. That's just not a good thing for the economy. The higher the rates go,
I'm
the
moving down
less
here.
likely it is that we're going to get this
Get back
mild
to the
recession
lows, maybe
that the
we'll
Fed's been
see.
promising.
Yeah, I want to talk about that because you're essentially saying that a mild recession is wishful thinking at this point. Why? And what do you think is in store if it's not a mild recession?
I'm not necessarily saying that a mild recession is wishful thinking. I'm just saying a mild recession is not something that we should bank on, because when we go into a recession, it's hardly ever mild. I don't know that people really recall a recession being particularly mild. And at the same time, what we're going through right now is a massive transition in the way our economy works. We basically have a lot of inflation after many years of having almost no inflation. We also are transitioning in terms of the way we work, you know, people going to the offices versus working from home. And then on top of that, we have a transition in terms of quantitative tightening, also coupled with a fiscal drag, right? A lot of the stimulus that we've been having in terms of SNAP benefits, you know, unemployment benefits have rolled off. So all of that put together, in addition to this mini credit crunch that we're getting in the banking sector, is not going to be very easy for the economy to navigate into a mild recession. But the good news on that is that after last year's equity moves, the equity markets have priced in some form of slowdown, right? A lot of this has really been priced into the market. And so I think that if you want to stay invested in the market, just look for what's priced it in. what's cheap and ride it through. And I think that would actually be
recession
okay for investors. It's not going to be the kind of bull market we've had, but it's not going to be a terrible outcome overall.
So as you look for investment opportunities in the current market, what's cheap to you? What looks attractive?
In the U.S., certainly value stocks look attractive, but if you're willing to bear the volatility, small cap value is particularly attractive. These things have been really beaten down last year, continue to be beaten down this year. You're getting a lot of companies that trade in single-digit multiples here that actually have reasonably high-quality businesses. So that's an area that I would really encourage investors to look at.
So small caps, even if this economy is heading into what might not be a mild recession, wouldn't small caps get hit the hardest? Or you're saying that that's already been priced in with last year's declines?
Yeah.
Oh, so that's a great point. I actually think that that's already been mostly priced in with last year's declines. So when you look at small caps, one of the things that's really important is when you go into a recession, they can do okay. They can do okay. But what you really need to be careful of is the quality of these stocks, right? And so you need to compare not just are these stocks cheap, but are they stable? And so one of the best things that I think to do is to hunt for value in small cap, but at the same time pair this with a screen that basically weeds out the worst quality stocks. That's certainly something that we really advocate, particularly within small caps.
Okay, and areas to avoid, you say commercial real estate and banks. I'm curious about the banks call. Does that mean you think that there's more shoes to drop in that camp?
So I actually think that the commercial real estate conversation is something very interesting, right? I mean, I think if you looked at bank earnings this morning, all the banks that announced this morning came out with earnings surprises to the upside. And most of the shares rallied. I mean, you saw Citigroup shares rally, JP Morgan shares rally. And at first, Wells Fargo shares rallied. Then as you went throughout the day, that rally kind of petered out, and they were actually down for a bit of the day before.
Jenny doesn't come on at the last hour.
To, relatively flattish. And if you take a look
She's
at
too smart for
what
that.
is the difference
She goes
there,
home
there was
to
a lot
avoid
more
traffic.
focus at Wells Fargo, for example, on their commercial real estate loan book. So I do think that there are more shoes to drop in the commercial real estate, and I think that the banks that are most exposed to commercial real estate could get hit in the coming quarters. There could be an extend and pretend, but at the same time, there are also going to have to be higher provisions for loan losses in that area.
So you'd be avoiding all banks altogether, or just those with more exposure to commercial real estate?
Definitely those with more exposure to commercial real estate. I think that those that actually have a managed book on commercial real estate have really, with the SVB, Signature Bank failures, a lot of banks have been, the baby's been thrown out with the bathwater, right? So a lot of these banks are trading at single-digit multiples. If you can find banks that don't have these kinds of exposures, those are good places. Those are reasonable places to invest for the long term, reasonable places to hide out. I mean, we as a society need banks, right? We can't function without banks. These are businesses that have a place in our ecosystem. You just don't necessarily want to be in the ones that get stuck with a poorly managed loan book or a poorly exposed loan book at this point.
All right, appreciate you offering your takes. Kuei Wynn, CIO Equity Strategies at Research Affiliates. Thank you so much for joining us.
Thank you.
Coming up, we're talking to Dave Hardin. He's the CIO of Summit Global Investment, and he's a big fan of investing in ETFs in turbulent times. We'll find out more when Market on Close returns. Stay with us. We'll be right back.
Top investor in Charles Schwab sold its entire $1.4 billion stake in the brokerage during last month's U.S. banking turmoil. Close with a Z. The GFAI is moving back up to VWAP. Rest bounced up to VWAP. Eyes bouncing here. But Bath still below VWAP. 1.4 billion is a lot. Yeah. Yeah, time to let GFAI go. Or not. I don't like to emotionally check out, so I don't let myself get back into something if I should. You know what I mean? Just trade it, don't think about the ticker. Yeah, SMX down a lot. Right at $2. We'll see on Monday. It comes down a little further to find support. 173, 161 I would say are supports. 151 is kind of, or 150 is that last final stop. I'd like it to hold. On the longer time frame, it's still bullish looking, still momentum up, just a take profit day on a Friday, which is to be expected, which is why I was considering selling. Thanks for the great trader. Six added triple digits. For 2 million. They didn't buy more. Alright. BBBY right at VWAP. Break VWAP before close. Nat gas at the high is up 5.74% today. Not a bad bounce on the old natty. SMX moving up here. Good to see. VWAP still like 20% away. 30%.
Thank you. Thanks for having me.
Up next, it's time for Options Quarter. Alex Coffey joins us to walk us through a couple of stocks with unusual options activity on the day. He's taking a look at NVIDIA and...
Yeah, maybe the speculation is on Elon Musk doing something from the video. We're getting some unusual options activity. Be great for my short. Yeah, this makes my little puppy whoopee a bit. Actually got enough time to do a video. But bears myself with my recap on SMX. We called it out 2 days ago, so could have made money. Good exits were necessary. I think it could still run next week though, or the week after. Still like it. Thanks guys so much for your subscriptions, your likes, Ace, BBBY, Fire Marshal, Bill. Appreciate Appreciate you. You sniped them today. You got those grays, you turned them green. Don't let anyone tell you different. Don't care what they say about you, Fire Marshal Bill. Don't care. But thanks for your guys' support. Thanks for your likes. Hopefully you had a good week in the market. It's pretty exciting. Next week we've got earnings. Yeah, we'll go over that in the recap video. Sub up, like up, comment down. Happy money sticks around. Willie also joined Discord. We both mentioned him. Do with that what you will. Some people just like to lurk, man. Thanks, Jonathan. Thanks, Jim. Thanks, big hugs. Appreciate you guys. Your support. We had a good day, good week in the market. See you on the recap video. See you on Discord. Hit the notification and subscribe if you haven't. Okay, peace. Oh.